Well, when we're live, woo! We made it.
Bang, bang. What's up,
Okay.
everybody?
Let's see. How about sure the numbers are going up. We see 4, 5, 6 people. People are finding it. Matty All In is at the All In podcast, not his podcast, but the All In podcast meetup
Conference, yeah.
in slash convention out in LA.
Mm-hmm.
And they invited him to take the DeLorean, bring it out there, put it on the, put it
Pretty
out there.
good.
They're doing like a whole. I don't know if you guys caught this when he was talking about. They're doing a whole party where people are dressing up Back to the Future style, and
yeah, Maddie mentioned it.
yeah. So
yeah, I mean, I'm a big fan of the podcast period. That, they discuss a lot of great topic, every week or every other week sometimes, and then some of the video because they put it from their channel also comes out. They had a really great segment. I highly recommend everybody to watch that. The segment they have with Elon Musk, the segment they have with Sergey Brin, which is the co-founder of Google. So just great stuff, great value. So
yeah, he said Elon was there last night and spoke, I guess, or maybe today. What is the All In podcast for those of us who want to know?
Okay, good. So anybody that's should be, I think, interested in personal development and stuff like that, and then related to markets, it is a YouTube channel. Which started specifically with individuals who are very well known in the VC world, right?
VC,
venture capitalists. Yeah, exactly. So because you typically see people that, obviously YouTubers, they don't really have, a lot of them don't really always have like business background. They're just kind of, hey, I wanted to stream, do something cool, and then they learn the business along the way. Or sometimes you have people related to, obviously, athletes, sports, personal trainer, stuff like that, health, nutrition, spirituality, religion, music, stuff like that. That's usually mostly what you see people do for the most of the time. So, you know what I mean? And in a little crypto bubble, besides, Bitcoin, Ethereum, whatever, you don't really see a lot of people doing those type of podcasts. So what makes it special is that it's people who actually started backwards, where they're like very business focused, very like you almost never see them, quote unquote, on the public stream. They will always be at conferences. Those are people like you would love to meet them, but let's be honest, most people can't afford to go to those very expensive conferences when it's $5,000 a ticket and up. You know what I mean? So this is why.
And even so, I mean, it's hard to split your time between 1,000 people who are there that want to talk to you.
Yeah, exactly. What's up, everybody? So basically that's what made it very, very unique, because for the first time, it's like you have access to the VC, the big guy, without having to go to a big conference. And then it's kind of like the analogy of like you're that cool little mouse inside the room and then hear what they're talking about, because they just have their regular, quote unquote, business meetings. And then they come up with this great idea right after COVID, because everybody was stuck at home and this, that, and then provide synergy, helping people out, providing guidance, because a lot of people were lost, entrepreneurs, stuff like that. And then since they have the know-how, because they do it on a daily basis and they see a lot of the nonsense, it's kind of what we did in crypto, where it's like, wait a minute, instead of listening to the fake influencer or the people that don't know what they're talking about, since you happen to know what you're talking about and have the knowledge, it's almost like a crime if you don't share with people. So that's because they're clearly already super wealthy. They don't really do it. They don't do it for the money, period. They don't even run any ads on the podcast whatsoever. They're just, and it's just great discussion. And they happen to be their best friends too. And then they come up with a cool name, All In Podcast, Cool Your Music. So if you ever want to have that personal development, learning about finance, learning about VC, learning about just, business processing, learning about a new cool invention that's coming up, it's a well thought out, all purposes podcast, and that's why I love watching it literally every week.
Is there much of a crypto component, or is it
every now and then
they talk about crypto?
Yes, every now and then when it becomes a main issue, because again they primarily started related to like stock market stuff, and then obviously building actual business. They talk about processes directly related to business. When they start talking about, for example, I was talking about earlier about the segment they have with Sergey Brin and a little bit Elon Musk too. They really focus a lot about AI, the advancement, where it's at, where it's going, what they're doing at SpaceX, Tesla, and then also what like market needs. Like they also talk about what's going on with the attack against freedom of speech, things like Richard Hart talks about all the time too, which is really attack the guy in prison and the guy from Telegram, and also what's going on with Elon with what's going on with the Supreme Justice judge. So it's like really, really great, important topic that people should be focused on and pay attention to. And what I love is like they love to answer and ask tough questions, because it's not something that you easily answer in a right or wrong, yes or no. It's very nuanced. So it gives you perspective, it gives you great analysis, it gives you feedback. Like, oh, am I crazy thinking the way I'm thinking? And you realize, oh, other people think the same way, and or like, well, people think opposite way, but then they can provide an explanation about why they think the way they think. So it's like it really broadens your horizon, and it's kind of one of the reasons why I love about traveling too. It's like you get to meet people that you usually thought you would disagree with, but then you understand where they're coming from. So now you can put yourself.
Definitely makes your brain bigger for sure. That's definitely a big. Like I try to take my kids to other countries all the time for the experience. Like my eldest son, he's probably closer to your age than my age now, Kareem. But he's been to 14 countries, and it totally changed the way he thought growing up. Right?
Oh yeah,
like India, Thailand, all of South Asia, like more than half the countries in Europe. He's probably touched the ground in. Like stuff like that is really good for development. And I think something like these All In podcast guys who are VCs and stuff, I'm sure they're well traveled. I'm sure they're providing different perspectives. I think it's really great that Maddie's able to network there. So hopefully he can
huge,
100%.
Has a chance to bring up Pulse Chain or crypto in general, really, right?
Well,
for sure.
He's a natural for that though, right? He's got the car, he's got the license plate that says All In. That makes it feel like he's like part of that community heavy, and he does listen to him. I guess it sounds like something up my alley, because I like business and all that, and it sounds to me that some of the things you talked about already, Kareem, about him is they're stressing taking action and then figuring it out, which is not intuitive, right? A lot of people they want to do a business or something, particularly the really, really smart people out there. They're like, oh, I got to get it all right first, but you can't get it all right first. It's really more important to get started.
Exactly, and that's a fundamental rule behind the failing forward, where it's like it's almost like you said, never going to happen when you're going to get it all right first, and the anomaly time where you do, it's not even that you get everything right. It's just like you thought about something, you got that done, but then along the way you've thought bigger, and then you find other things, and then you met other people say, hey, what about if we tried this, and what about if we tried that? It's kind of like what we call iteration. We see that in code, you see that in just basic work, or like companies where they grew, they thought we were just going to do this product, and the next thing you know, we have a streamlined product, and then we start having other things because customer came to us, we're like, oh, this product is great. But then, hey, what about if we try to do this and that? And what about if we're trying to address this thing and that thing? And next thing you know, you have a fleet of different products that derive from the main product. Make sense? And that's, to me, why innovation comes in. They're pushing the boundaries. They're not looking at it like being stagnant. They don't look like, oh, we already reached this, that, and the third. It's like, how do we stay in the cutting edge of innovation? How do we continue to invest? How do we continue to, again, also protect the country, like, what I mean, in terms of like not letting all of our innovation go overseas, not dealing with issue of like, free speech, not protecting the border. Like, that's what I love about the podcast is they talk about so many different things, because people would think, oh, they're just VC, they just talk about the VC. No, they worried about issues that the little guy worried about too, because at the end of the day, they're citizens as well. They have the same worries. They got kids, they got things they got to worry about same way. You know what I mean? But they're trying to be open-minded as much as possible, well-traveled, and also arm themselves based on studies, and less about just speculation, but just more like facts, studies, and like, hey, if you're going to agree, say why. If you're going to disagree, say why. Don't just, lash out or say things just to say things. Like, come up with your study, come up with your research, come up with choose from. And I like that kind of approach, kind of the first principle approach. So the discussion is way more robust, because it's backed by things where people can be like, oh, wow, this is the study, this is the fact, this is the book I read, so you get to understand where they're coming from. So yeah, a lot of the time I pick up book recommendation from that. I pick up articles or just simply subject that I thought I was well-versed on, and I end up learning something along the way. I mean, so it's just like, that's why it's cool. Even if, let's say, you can't catch the podcast live, you can always watch the replay later on, you know what I mean? And I'm so used to 2X because I watch so many, like literally it's every week. I have about like 10 podcast / YouTube channel that I watch literally every week, and it's one of them. So I highly recommend. Great stuff, great discussion. It might be a little bit intimidating at first for somebody walking in and, oh, what the hell are they talking about? But I promise you, if you just show up, just listen, trying to grasp what does it mean talk about, little by little, by your third, fourth, fifth week, you'll kind of really understand what they're talking about. For what's going on in the world, right? What's going on with government, what's going on with AI, what's going on with freedom of speech, and what's going on with just sometimes they just have a little like a scientific quarter. David Friedberg talks about that, which is great. It's like just say, hey, have you heard about this new invention that just came out? Like just cool little stuff like, oh wow, if you knew about this or if you didn't, then you get to learn something new.
The MP3, remember that? Yeah.
Hey, great invention back then. Hey,
hey man, we talked.
You don't need a CD anymore? Oh my God, the tiny little thing! I was so impressed. I remember that early high school. I was so cool. I was like, put that in my pocket. It looks like a little
high school, eh?
Yeah.
Okay, well, so Maddie's out there, and that's cool, right? That was on the thumbnail. He's out there with a couple thousand other people. They're all dressing. I don't know if they're dressing like the Doc. I don't know what they're doing. Everybody's wearing life preservers or vests or whatever. But he's out there.
Back to the future theme. You have to be back in the future.
Yeah. He's out there. I don't know who Biff is. Maybe Maddie's playing Biff. I don't know. But he's there.
You'd make a good Biff Crispy with that haircut.
I could try
that. A solid Biff.
But I don't want to deal with the crap. So he's out there and representing in Hollywood.
That's awesome. Yeah, shout out to Maddie again representing that. That's good. Another thing that I like about what they do in the podcast is like they also have that kind of they're all serious business and everything at time, but then also they can switch it back and be kind of like not goofing around, but like being that little kid. It's like a genuine podcast. They're laughing, they're talking, they're best friend, they know each other for a while. It's like it's not like stressed corporate, this, that. They're just chilling, having a talk, and literally it's kind of like literally what we will be doing when we're just hanging out, like on a hangout, but like serious, but at the same time, like serious on the topic and because it matters and want to like further the conversation, but not serious in a sense where it's like everybody got to feel tied up and whatever. It's more like a relaxed environment. They crack jokes every now and then. Even in the Elon segment that I saw earlier today, he was cracking some jokes earlier too, and it's good because you get to see like because you get to feel bad sometimes, man. The guy just work, no life, no nothing. So it's like good to see that little balance as well. So. And right now, obviously, the biggest topic is what's about to happen. Like we were talking about backstage, in the next 20, 30 minutes, the debate, Trump, Kamala, and then what's going on. Because, we're in an election.
Oh, yeah.
That's going to everyone's talking about that. Rich or poor, all eyes are on that election, right? Like Canadians, Americans, Europeans, like everybody wants to know what's going to happen with this election.
Yeah.
That's
the market wants to know,
The market wants to know. Yeah.
Hey, listen, the outcome affects everyone, so to some degree, right? So yeah. And so for all the listeners here listening in, we told Maddie we'd come on and we'd kick this off. We'll see where you guys want to take it. If he can get in here, he's going to come in maybe in half an hour or so. We realize that a lot of people pick this up on the replay.
Exactly. So but just in case,
short, we don't know.
Yeah, exactly. And if you can't, I want anybody to understand that's perfectly fine because he's at a special event. You know what I mean? That's like once in a lifetime opportunity to some degree. So because again, you got the people, but like it's still very expensive to be there, and then some of those people you might never meet them again. So you want to focus because I've been at events like that. So it's like
I can give you the outcome of the of what this debate's going to be, and probably be 90% correct. I can't give you prices though. I have no idea.
Only political advice, no financial advice.
Yeah, right.
Political advice. I know half the people are going to say Kamala did great, and Trump lost, and half are going to say Trump did great, and she lost. So there you go.
Depends on the news outlet that you're watching from.
But yeah.
But the market seems to have sniffed a little bit of something there, so. I don't know if you want to jump right into it just in case Maddie don't come back.
Yeah, sure. Look, go ahead and do it. I mean, I think it's worth talking about what's been happening with Bitcoin and ETH the last couple of days. They bounced.
Perfect. And I need to do a little recap of where we last stopped last week, which is why it's pretty good. Let me see here. Boom.
Kareem, the dream, bring it. I got to make up words while you're pulling this up.
That's awesome.
I'm excited, man. I just went over. Was in a mastermind a couple hours ago.
Yeah. John told me a little bit. So let me know if you're able to share the screen.
Yep, and we were talking about the stuff then. Oh, there's lots of us. We're going back to the future.
Right. Exactly. All right.
You want full screen? You want us on the screen with you?
Yeah, well, both, either or, as long as you can
Let's
see
go
the screen.
full. Let's make sure people can see.
All right, perfect. You see the screen now?
I can see it.
All right, fantastic. So this is, again, I want to start focusing on the Ethereum chart because I think for most of us watching, and that's the thing that we care about the most. You know what I mean? Obviously related to Bitcoin as well. But a couple fun facts into really what we talked about last week, which is great, right? Congratulations. This is a weekly chart. Let me put it in the daily real quick. Congratulations to all of those of you who will be able to catch that dip if you were able to, dollar cost average more if you have, ammo left. But basically, like I was saying last week, is expect literally before it peaked, I say, hey, expect the yield curve to happen, to uninvert itself, and then expect somewhere to be in a lower, 2100 to 2200 Ethereum, because chances are if Bitcoin go and revisit the 51K roughly, right, 51, 52 region, which it did that little dip here, short seller really tried, then you know that you're going to get that same opportunity with Bitcoin. And I know I've received some message from some people say, hey, good call, blah, blah, blah. They got filled below 2200, which is good. Now we're getting this little relief rally here. The reason why I say relief rally is because we're not out of the woods yet, right? When you look at the moving average, they're still, right, tilting down. We're still in that little bear run. Again, very important, a bear run in the bull market. So I don't want anybody to panic. The one thing that's a little bit alarming moving now is that the 200 moving average, which everything was happening here, was still kind of going up. But since we've been below the moving average for quite a while now the moving average is starting to go down. So that's technically something you want to look out for on the daily chart, because the more it angles down, the more bearish it gets. And if it gets too bearish, what ends up happening is, just give you an example, when you go below the 200 moving average, but the moving average is still tilting up, it's easy to recover. Okay, that's pro tip. But once you start arcing down and then you revisit it strong resistance to push. Okay, let me show you what I mean. Pointing fact, how it's a little bit hard, right? You see, even here, we went below, but it tilted just a little bit, but then we recovered. We went back quick. So even though it was still hard, it took us, a week, but then we pushed out. But an example where it's like it's bad, it's like here, right? This bear market here, when we went, imagine this is what's playing right now. We don't know, but imagine this is what's playing right now, where we went down, it started arcing down. We tried to recover, but then it failed. And the moment it really started to go down again, very strong, it's like, see you later. It's like you never get nowhere near it until a very long time, until you get able to kind of recover it and then push out. So what I'm hoping is that we're dealing with a situation like this one here, which is basically similar to what happened with during this time here for Ethereum. That's when Bitcoin kind of had that little dip after the ETF and then recovered and then ran. So where it's like we're below the 200 moving average, but temporarily to the point where it doesn't arc down too much and then we can recover it. So this is the reason why this next coming week is going to be so critical, because it's going to tell me what this is going to happen. Is it going to do this where it's like slightly down because it covered and then it's going to recover as this push back up, which basically is the bounce that I've been waiting for, right, on the weekly chart right here, which is we bounce off the 200 moving average on the weekly chart now this time, which is very good, because I expected this area to hold, because like I said, with all the changes happening right now, first is going to go retest, put the limit orders, it bounced, which is good. Yield curve has uninverted itself, which is good. So again, pro tip right here, the 10-year yield is now 3.646, right? So it was at 2.72 when he did the inversion. Now it's keep pushing down, which is a bullish thing. It's good because the lower the yield are, the cheaper the money becomes, which is good for us long term. And at the same time, the 2-year yield is even lower at 3.598. So for the new people watching in, what does that mean? Is that when the short-term interest, so basically when you borrow money, right, now the long-term pays more than the short term. It becomes back to the normal what it was supposed to be, where, kind of like how we have in HEX, longer does pay better. But the good news on top of that is that they're both trending down. They were both around back in the day, a week ago, 4% plus. Now they're both strongly below 3.7, and they're both still trending down, which is good, while at the same time maintaining that separation where the longer yield still pays more than the shorter yield by about, now we're looking at about 46, 48 basis point, which is good. used to be 20, 39. It's like over 40. So as long as they continue to maintain a 40 to 50 basis point difference as they trend down, it's very, very good. So we're doing the right thing. This is why the market has started to bounce after it hit that 200 moving average, because we are getting what we wanted to see. An inversion, but not a crash. Now, why is that? Because on Friday, also, when the news came in for the unemployment rate, although we got bad news when we knew about the revision that I told you guys about, that they lied about the 800,000 jobs, and they had to rectify that for the last 4 or 5 months. When the new data came in, that was bad, but it wasn't as bad. So it was kind of like within expectation. So this is what the market's saying. Okay, cool. We're on the bad territory, but we're not in the worst territory. And then the biggest news is what's happening tomorrow, which is called CPI data, which is very, very important, the Consumer Price Index, because just to reiterate, the Federal Reserve has two mandate, right? Full employment, right? This is the reason why we're worried about unemployment rate. And then also that inflation rate that got to be around 2%. Now, obviously, we've been celebrating being below 3% because we've been above that for so long, which is why it's good. But there's rumor has it that it's going to be potentially 2.6% tomorrow. In other words, even a little bit lower. So it continue to trend towards the 2%. If that happened, that is bullish, because now inflation is going down faster than expected. And if it goes faster than expected towards the 2%, the Federal Reserve has to turn on the printer faster, because another thing that you don't want, funny enough, is called deflation. You don't want too much deflation, where things are becoming so hard that credit freeze, transfers are not happening, bank are not doing well, which we know that already. But more importantly, that can create bigger financial hardship. So just as inflation is bad, deflation is also bad. So they have to maintain that balancing act. So if we're getting that bullish news of the inflation really trending down, it's going to license to give permission to the Federal Reserve to continue to lower the rate, because now they don't have to worry about the inflation being like a problem, because it's really trending down. So they can turn back, the printer. And then on the other hand, we already got the data from the unemployment rate being not as bad. Like it's still within the parameter of expectation. So this is the reason why the market has reacted like that so far. But that being said, that's the rumor. Remember how it is, buy the rumor, sell the news. It bounced right now, but it's been bouncing since the last 48 hours. But the real data comes tomorrow. And like I always tell people, especially people that try to play leverage game, be very, very, very careful. There's a lot of volatility every time those big announcements comes in, FOMC meeting, especially something like that matters, like CPI. So because it can clearly just turn sour within 30 minutes. If the data comes out and it's not what people expect, in other words, it's not 2.6%, it's still around 2.8, 2.9, basically saying the inflation is still sticky, aka stagnant. Now it's becoming a problem, because now people are going to panic, be like, okay, we're not out of the woodwork just yet. So that's why those are the things that we have to watch out for. The same way last week, we had to watch out to make sure the unemployment rate doesn't become too bad. Because if it becomes too bad, like I warn people for the two scenario, is like we want the 25 basis point. That's what was cooked in the book. But then if the number comes and it's too bad, they have to cut more. And if they cut more, it's going to create more panic in the stock market, because big investors don't have enough time to start moving the money again to the bonds. So that's what's going to create a bigger push down. Because as people have realized, to push that interest rate at 3.6% at this low, like literally the stock market lost like almost $2 trillion. I mean, that was a big, big drop that they did here, because the cash out near the top. So that's why we're getting this pushback. Now it's recovering because they're going back under the notion that, okay, it's just going to be 25 basis points. It's not going to be 50, because when the unemployment rate came out, it wasn't as bad as expected. So it's like, okay, cool. It's bad, but it's within the range. So the stock market can still be stable, where it's like the rates are going to go down, but slowly, which is what the market wants, 25 basis point at a time per month. The moment you start doing 50 cut or 75, what they call jumbo cut, now all of a sudden you're messing up the balance, because people who are thinking about, cashing out slowly, pumping, cashing out slowly, pumping, and doing kind of this is what they want. But the moment they got to panic, then you end up having something like this, because people are going to run to the bonds. Because that's what they want to do, because they realize that we're not going to get 4 or 5% interest rate anytime soon. This is the reason why they got to lock that in. So now the big data tomorrow is going to tell us what we need to know. which is going to be the key that's going to tell what's going to happen to obviously Bitcoin, which then what's going to happen to Ethereum. But as of right now, we're within the target. The yields are going down and then going down at a steady rate. The yield curve already uninverted itself. So that big drama about the shock has already happened. We got the shock. That's good because it went from this being higher than that to that being higher than this. So that we don't have to worry about it anymore. We just now need to see how fast is it going to drop. We want a slow decrease. We want something like this, like I mentioned to you guys before, something like that, like it's just slow. The moment you start puking like this or like that, then you know you're in trouble because you got to ask yourself, why are they dropping the rates so aggressively? The only way you do that is when you're in trouble. The only way you do stuff like that, you're in trouble. But if it's like a slow decrease like this is what you want. And for people watching, this is the weekly chart. Like as crazy as it sounds, if we just puke slowly like this, we can go bull market for another 24 bars. So, 4 weeks is a month. So you're literally looking at somewhere around like 7 weeks, 7 weeks, 7 months, 6, 7 months. So that gives us that nice bull market going into 2025, which is what you want. But if we start getting a big drop down, that means that something is broken in the system. But fortunately, we're not there yet. So what I'm expecting is something like this happening here. Slow bleed down all the way down to the 200 moving average. Don't expect rate to go literally below 2% anytime soon. The only way that happens is, again, we get a economic shock. And you don't want that too anyway, because the inflation will come back to haunt us. So, but we want that nice slow bleed all the way down to the 3% area, which is where the 200 moving average is resting at right now. And this gives you ammunition for Powell to lower rate, which is good for him too long term, because he just lower the debt, the national debt, the interest that we have to pay on the national debt, which is also good. So that way they have to print less. And print less means also less inflation to worry about. So as of right now, the playbook is under control. Mad credit to Chairman Powell right now. The soft landing playout is playing out right now. We're drifting slow. We got the additional shock. Stock market took it on the chin, but that was okay. It just, did a little pullback, but we're still looking good. Everything's looking good. SPX, all the other stuff, because big tech and NASDAQ was hit too, and then the Coinbase of the world, but then everybody recovered the last 2 days, thanks to that data that came on Friday saying that it's not as bad. But tomorrow is going to be the CPI. And the CPI is going to be the key because right now we have 75% chance that the cut is going to be 25 basis point and only 25% that is going to be 50. At some point last Tuesday, it was almost 50-50 because we didn't know about that data that came on Friday. Like I was giving people the both scenarios. So that's why it's good. So what's being telegraphed right now, it's working. Congrats to those who bought the dip at Ethereum below 2,200. That's really, really good. What that means is if the CPI data comes back tomorrow and it's within expectation, meaning we're flirting around 2.6, 2.7 inflation, that's good because the month prior we were around 3.9. I don't know if you guys remember.
Would you remind everybody why the CPI is important and what it is?
Good, because the CPI, which stands for the Consumer Price Index, is literally what tracks down how bad inflation is. You guys remember at some point at the peak, it was crazy. We got like 9%. We looked like a third world country. Then we quickly started going down towards 4%, then 3.5. But then for about 6 months, for those who remember around January and February, we were literally stuck between 3.2 and 3.5. It's like literally we had a steep drop back down, but then we became what's called stagnant. The inflation was entrenched. We went to 3.2, then back to 3.3, 3.4, 3.5, 3.4. So we just keep dancing where, first of all, it was bad because people thought the inflation was rising back up because it was starting to trend up. Thank God it stopped. But then after that, he didn't go down. It just stayed around what it was. So it was very, very stagnant for a while, which is why also Federal Powell wasn't cutting the rate. So it wasn't rising the rate, thank God, after you already were 5.5, because he genuinely thought that it would not go back to the 4%. Thank God he didn't rise, because if he rose it further, he could have even break down the system and then cause even bigger problem and then have to cut again back. So the fact that we were able to patch that crazy situation, that that dark cloud, is very, very bullish because he hold it down. The market didn't crumble completely. That's good. And then now we start to trend down, which is really good. But then also, he can't rest on this laurel because if you now also, as the inflation going back down and you don't cut fast enough, then you risk deflation on the other hand, which is equally bad. And then you're going to have to panic print after that. So in other words, instead of playing the catch up every time, like last couple cycles, they have to be on the ball. And right now, Fed Powell is on the ball. He's not too fast. Like he didn't hastily raise more when the inflation was stagnant because he just believed that we just need to stay here and wait for the data. And then he did, and it was good. And then now he's not also trying to drop it too fast, because if you drop it too fast, then inflation kicks back in because people get trigger happy again because money gets cheap again. So he has to find that just balance, but he has to review the data and move fast because unfortunately some of the data that you watch is a lagging indicator. So you have to kind of predict trajectory, the same way how a market is future looking, right? Inflation is at 2.8, 2.9 right now. Tomorrow, anything below 2.9 is good because it's lower than what we had before. But if you get 2.6, it's even better because that means that instead of just be like, all right, it's going down, let's wait and see what happens, it becomes, okay, it's going down, but we can print. Does that make sense? Because if you get 2.8 or 2.9, it goes back to the time when we were at 3.4, meaning, okay, it's trending down, but it's not really going down. It's just where it's at. It's stagnant, which is also not good. And when it's stagnant, you can't make a hasty move by lowering, because what if you create more inflation? But if it's severely, well, severe is a strong word, but if it clearly trends down 2.7, 2.6, as we are already thinking about lowering the rate, that's very bullish because that really gives that confidence for Powell to say, you know what, we're going to be able to cut the rate, which is why it's very, very good. So tomorrow's data is going to be key because, again, markets always forward looking. We are 5.5, but because people are already expecting the Federal Reserve to cut by next week, we're already at 3.6 because markets always forward looking. They always, like I said last week, they always want to have 1.5 to 2% point spread, just in case. So 5.5, you have 3.5. By the time they lower it to 5, expect this thing to go to 3. So this is going to go like 3.4, 3.3, and then this will probably go to around 3.1 or something like that. Again, continue to trend down as we're telegraphing it right now, but you just got to do it slowly. Now, that's the best case scenario, which we want, okay? Because if that happens, we don't have any issues here. Stock market keep going up slowly, but going up because global liquidity is coming back online. Because remember what the Fed's doing. They're not just lowering rate. They're lowering rate and then they're turning back on the printer. So in other words, as the rates are going down, because people are cashing out and going to the bond, new money is coming in the system, and that new money is going and buy the dip in the stock market. So this is why you see this kind of healthy action that the market is doing, which is this. People cashing out, liquidity come in, pick it up. People cashing out, liquidity come and pick it up. Kind of like imagine an ideal system with HEX where it's like people cashing out the interest, restaking the principal. Cashing out the interest, restaking the principal. So it's like a balanced system. You don't
Sorry to interrupt your programming here, Kareem, but I just wanted to hop on, keep this streak alive, 196 weeks. I've got the DeLorean parked next to the VIP entrance for the event tonight. And yeah, it's Back to the Future themed. So 1,950 people who paid $7,500 each are all going to be at the event dressed up in Back to the Future gear. The HEX DeLorean is there. It's on one side. It's got the all-in license plate. On the other side, it's got out of HEX. Why does it say out of HEX? Well, because I staked it all. That's why. So yeah, really excited to go there and get the word out. I think there's going to be some high net worth individuals there that I want to onboard into crypto and mental health and HEX. So hopefully you guys can wish me luck and
good luck, Matty.
Keep up the great show.
Good luck, Matty.
Keep spreading the word.
Yeah. All right. Yeah. So thanks, guys. And everybody hit the like and subscribe button and follow all the speakers here. And until next time, keep the show going.
Sounds good. Thanks. Appreciate it.
Peace.
So yeah, as I was saying here, it's like good steady balance where it's like those who are cashing out, going to the bonds, most likely. It's the big investor, like I was telling you guys, that started buying a year ago plus when they are up, 20, 30% on their money. So they're cashing out. And then the new investor is probably just the global liquidity coming in, picking it up. So that way it creates a balancing act where it's like those who are cashing out are picked up by those who are coming in thanks to the global liquidity. So that's why it's good. So we continue to have this trend down as the market continue to go up, because what's going to happen is, just like in hex staking, when the yield, this is very important what I'm about to say, okay? I don't know if hex we watching, but I'm going to say this slowly because it's one of the key part of today's show that people need to understand. When the yield reach a critical point, right around usually 3%, so 3.2 to 3%, what's going to start happening is that big investors are going to start looking at it like it's actually becoming riskier. I say this slow. It would then become riskier to be off the market than on the market. Let me explain why. Because as I was telling you guys previously, the real rate, and I tweeted about this, the real rate right now, which by definition is yield inflation, yield that's being paid minus the inflation rate, is right now it's positive. In other words, if you're getting 3.6 on the bond right now today, but inflation is at 2.9, 2.8, your real rate is 0.8. In other words, still positive, which is good. The moment, let's say, this continue to goes down, rightfully so, making money cheaper and cheaper and cheaper, and let's say it reached 3% or even 2.8%, just give you an example for argument's sake. And if it goes to 2.8% and then inflation is still at 2.8, for example, now all of a sudden your real rate is now 0. In other words, money that you're earning adjusted to inflation is now getting close to 0. Now, very important, this is based on the BS shadow stack. We both know real inflation is much, much higher than that. So in other words, what's going to start happening is that real inflation, real investors, big investors, are going to start to be like, well, we have to go back into the markets to get returns, because now the earnings that we're getting, the guarantee money, so to speak, is now not even keeping up with the inflation. Therefore, I have to take more risk. And that's why big funds going to start make allocation back to the stock market. And this is actually the way the Federal Reserve is pushing investors back into the market, by pushing the yield down to say, hey, you're not going to get anything here staying in that guarantee asset. You better go out there in the market. This is the reason why, for people who don't understand, it's a little bit controversial, but this is just a fact where most likely in the balance of probability, because the way Federal Powell is still going to be in power for a while, for at least a year or two, stock market's most likely going to pump going into 2025, whether it's Trump or Kamala, because this trend is going to continue. Cost of money is going to get cheaper and cheaper and cheaper, and people are going to have to deploy in the stock market. That's just what they're going to do. Now, if it's Trump, chances are, I think it's going to pump even faster and more aggressive, because, again, he has better policies regarding, deregulation in the market and, cutting the taxes for capital gain and stuff like that, versus, somebody wink that want to tax you on the, what's it called? No capital gains, but basically tax you on the unrealized gains. That's crazy. I mean, that's probably a clickbait, but anyway, she said that was wild. So that's why you got to look at it like, okay, we're trending in the right way, but very, very soon, when the yield gets low enough, boom, everything goes back into risk on asset, because they got to go find the return somewhere. And when that happens, as it slowly goes down, stock market picks up, boom, then Bitcoin picks up as well. This is also why this chart looks good in the sense where on the weekly right now, we're looking very good. We bounce off the moving average on the weekly chart, which is good. We're still in the Gosling channel. Typically, when that happens, we like to visit the low. But so far, he's saving the day. Is saying that this might be the bounce. But then again, CPI can change the story literally tomorrow if it comes out bad. This is the reason why, like I told people, like when you do big macro stuff, don't really look at the daily, because that could just be like, okay, we puked down. And then now this could just be like a relief rally where it just recovers here for the people who's shorting to just reload. And then that becomes like a bear flag, kind of like what we've seen here. It reloads and then dumps again. That's why I always look at the weekly. Right now, the weekly looks good. We started the week strong. And 2 days into it, we're already above the close of the last week. But then again, we still got 4 days to go. So we can't be too excited because we get a nice little pump, because literally we can wake up tomorrow and then it's back here or back down. And then next thing you know, he wants to make a new low. So once we know what's happening tomorrow, going into Thursday and Friday, we're going to have a definite answer about what the cut is going to be on the 18, because right now, 18 is literally next week, right? You see right here. So right now, we think it's going to be 25 basis points. If the data comes out really bad tomorrow, it might be something else. So that's why tomorrow is really, really a critical day. But once we know the data tomorrow and Thursday, we can literally telegraph what's going to happen next week. And then market loves that when there's no uncertainty. So best case scenario, It's good. Then we start to bounce. Don't be surprised if you see Bitcoin retake the 60,000 range and above. There's also a lot of nice, I'm going to the technical now a little bit. There's also nice multi-billion-dollar short liquidation just ready to be taken, and then we could easily send Bitcoin back to 62K like it's nothing. Not because people are buying, but just because liquidation or short, they have to buy back to cover it. So just that alone can bring us back, because again, the volatility is a little bit low because the big institutions are not really buying like they used to. They're just probably also sitting on the sideline with a lot of cash. Some of them are waiting for the dip if it comes. And some of you are just be like BlackRock, hey, listen, we got money. Dip or no dip, we got money. We just want to know where the Federal Reserve lies. In other words, if it's bad, we're going to buy the dip. If it's good, as it recovers, hey, we can just keep buying because we've been buying a shit ton over here. We have no problem buying where we're at right now because for them, it's just a dollar cost average play, right? So the same way, Bitcoin's doing a nice little recovery. Ethereum did that nice little recovery here as well. Again, shout out to those who were able to scoop on the 2200. Like I said, you're going to have that dip opportunity. So those who were able to capitalize on that, congrats. But again, we're not out of the woods yet. If we get the good data tomorrow, as Bitcoin goes back towards 60K, we're probably going to trend back towards 2,500. And if we can sustain that, then the next thing we do is usually we go test the 50 moving average right here on the weekly chart. So, but again, this could literally play out in 4 weeks. This is a weekly chart. Things move very slow. First thing first is we need to be above 2450, steady, and close. If we close that, then we're moving the other way. We start looking like this or like that. But right now, because we're lagging Bitcoin, we still haven't even go above the previous week close when we started to go down. So it's like right now, it's just if you're DCAing, just chill, wait, don't get too excited, because we might hang around here 4 or 5 weeks, the same way we hang around this zone here 4 or 5 weeks, because we're waiting for the data. But once the data is out, expect a violent move because the market's been waiting. They're not going to wait too long. Once they get it, boom, off we go. And that, again, is the best case scenario. I'll put a probability of 65% is going to be best case scenario tomorrow. But we got to talk about the 35%. What's the 35%? Well, 35% starts by basically saying the CPI data comes and it's just not good. In other words, inflation is still entrenched. We're still dealing with some problems. Maybe bigger problems going to come in. And at that point, the Federal Reserve's got to really, really look at itself in the mirror by saying, okay, cool. We do want to cut. But now we're having bigger problems because if the inflation is worse than expected, we might have to stay where we are or, cut very, very low. So it's like, this is why we have to wait for tomorrow's data just to see. Now, if there's a black swan event that comes out based on the data saying that it's worse than expected and blah, 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 we have other problem, that might actually trigger the Federal Reserve to cut bigger, like 50 basis points or more. And if that happens, investors are going to start to panic because they thought they will get that second 25% cut next month. But if they got to deal with that this month, that means they have to cash out more money out of the stock market faster than expected in order to go lock in yield before they degrade in value even further down. And if that happens, it will create a further pullback on the market. And if the further pullback happens, just like how it happened here, this, for those who don't know, this wick right here on the Dow Jones or on the US 30, is the same wick over here on the S&P 500, which looks like, M formation, which is usually bearish, right? Rise, retrace, continuation. So it dipped right up, failed to make a new high. Now we're here. If it dips again like this week right here on the weekly chart is the week literally where Bitcoin went to 51K, 49 actually, sorry. So we're literally mimicking similar patterns again because of their correlation. But again, that means that if we're getting that bad case scenario, like I've been saying, we're going to revisit 50K, possibly 47, 46, because again, there was that green vector candle here, which technically recovered here when this thing went down. And then you got this guy over here. And then now he just got recovered. So now, technically speaking, it doesn't have to go further down, but if the macro comes bad, then you're looking at first stop 50, 51K Bitcoin, which then means if you get that, then that means you're getting back to the $2,100 ETH again. Sorry. Right. Yeah, you'll get back to this zone because there's a lot of confluence here. So that's why I said to everybody, put your limit order below 2200. I have literally the bar here at 2215. If you got trigger down here, it's good, but we might end up hanging around here for a little bit. And the reason why this red here matters is also because back in the day when we were on that bullish standing triangle over here, back in the day for weeks, we popped out of there, we ran, and now we're just retesting back into the zone. So as long as we don't break below on the weekly chart, Ethereum is still good. But if Ethereum start going below again and close, I'm not talking about wicks. If it start closing below 2100 and more, then it's sad to say, but then we're going to have to go revisit 1800 and below. So, but we're not there yet. I don't think that's going to happen. But then again, the macro data of tomorrow is that violent. It can literally create both situations. Yeah, exactly. Because right here is close to where we were right here back in the day with ETH. So if everything goes well, we'll literally get this bounce, and then we can quickly run to 3K. The liquidity is very low. Low in terms of compared to big money, not compared to us. But for big money, it's very low because look at this. They're not buying ETH. They're just 0, 0, 0, 0. Why is that potentially good and bad? Obviously bad because it's not pumping, but also good because they're not selling. I mean, besides Grayscale. But again, too bad I can't go too far. But they used to sell 150 and 70 millions a day. Now they're barely doing chop change compared to what they used to sell, 8 million. Okay, we got a little 40, 50 over here. And then here, 22. But it's nothing. Today, 0, right? In other words, when ETH is in the 25, 24 plus to $2,500 range, they feel like selling a little bit. When ETH is like 2,300, it's so low, they don't want to sell because, again, they accumulate so much of it. Back in the day, they still own 7 billion or close to it, 6.8, because they started with 9.2 billion. They sold 2.6, 2.7. So they still have 6.7 billion of ETH. BlackRock picked up 1 billion right now. But BlackRock is looking for that big discount, like 1,800, 2,000. That's when they really, really come in. But right now, they're not really touching it. But that's okay for Ethereum because the Ethereum to Bitcoin ratio is helping Ethereum. What do I mean by that? Is when you go back to here, this chart here indirectly is helping ETH tremendously because there's massive liquidity for that. This is why it's been puking so hard because people are not buying ETH, the institution not buying ETH, they're buying Bitcoin. But because Bitcoin and ETH have that ratio, when you buy Bitcoin, hundreds of millions of dollars worth, you're also indirectly buying ETH because as everybody understands the law of bounding liquidity, if you push me 10%, you push yourself, the other coin 10% too. The only way that doesn't go up as well is when you go up and I go down while staying stagnant, which is why the ratio has been puking hard for the past 2 months because it's a weekly chart. It's been going down 21% because, again, people were buying Bitcoin, but they're not buying ETH. But ETH was still benefiting a little bit until that ratio started to correct itself. But now, over the last 2 weeks also, it's not really going down like it used to be. It looks like it wants to bottom, which is a good thing because some big Bitcoin investors, OGs, they know that Ethereum at this price compared relatively to Bitcoin is cheap. In other words, I'm not saying Ethereum can't go lower. I'm saying a $2,300 Ethereum compared to a $57,000 Bitcoin is cheap. Because the last time we had a sustained $2,300 Ethereum, Bitcoin was around 45K. So the fact that it's at 57 and we're not back above 3,000 and plus, for them, they're looking at it like, all right, cool. I can sell some of my Bitcoin, so to speak, to scoop up back some Ethereum at the low until it recovers. And then I can make 35% more Bitcoin. You got to look at it like that. That's how some of those investors are thinking. The same way back in the day when we had this dip and then recover, or here compared to multiple other cycles where it puked for a while and then once it recovered, it ran like we're doing right now. Same way here, puked for a while, they recovered, went a new high. So now we're looking at the same setup. So the reason why I showed you guys this is because although the Ethereum ETF is basically not doing anything here, but at least today, Grayscale didn't sell anything today. That means that they're not interested to sell anything at 2,300 and change. They want to sell 24, 2,500. So technically, they're not a net seller until the price reaches a certain point. You know what I mean? And their other fund, the one with the lower fee, has actually been buying, which is a bullish sign too. That means they see it as, okay, it's a potential buying opportunity. Because sometimes what could be happening is people are selling out of here and then right away buying here. So some of this 8 million can actually have come from the 22 million. It's a way also to do a little bit of tax harvesting, because you can literally, if you just recently bought, you can just sell at this price and then buy back at a similar price, so you don't really lose anything. But now you're just moving funds from this fund to this fund, because you went from 2.5% fee to 0.15, which is even cheaper than the BlackRock ETF. So that's also a potential bullish move. Now on the Bitcoin side, obviously, like I've been saying the last couple of days and since last week, besides BlackRock, everybody else been a net seller, big amount. Now yesterday, another third day. It's a rare, but it does happen. BlackRock did have an outflow, 9.1 million. That's not good. But the good news is that overall it was still bullish, because we ended up positive, because the other people that sold a lot, probably panic sold, some of them just went back in because they started to see, okay, stock market might not be as bad. Because you got to look at this ETF flow as stock market money, because as quickly as it comes in, as quickly as it can go back out, and as quickly it can come back in as well. If all of a sudden the data is not as bad, inflation is tame, yield is going down, and people are just calming down, boom. The same way NVIDIA sold off, Coinbase sold off, all those MicroStrategy, they sold off hard over the weekend, but then on Monday, boom, they bounced back. I mean, not exactly where they was before, but they're bouncing back. In other words, it can quickly recover if the data comes out and it's not that bad. We can literally wake up tomorrow and Bitcoin 60K, you know what I mean? Or if the data is bad, we can wake up tomorrow and Bitcoin is 53, 51. So it's like, that's why we have to wait. The macro is really, really running the show right now. That's the bottom line. Another bullish thing here is you see a same pivot happening here. See the GBTC at 1.5% sold 22, but then their same grayscale with the zero lower fee bought 41 million worth of Bitcoin. So in other words, not every sale is a sale, because sometimes they sell it just to transfer it, because they're looking at it like, okay, 53,000, which it was yesterday and whatever, it's a good place for them to buy. So and remember, for people to buy, somebody need to sell. For people to sell, somebody to buy. Some of this inflow shows up here the next day, but it wasn't because the price went up. It's because when the dip happened, price went down, triggered the limit orders, filled those people up right here, and then the price bounced up. So in other words, you can see the money here, 28 million yesterday, 53 million today, tomorrow. But the reality is some of those filled orders happened when the price was much lower. They just report it later on. So you just got to keep that in mind. It's averaged out. So we could be getting a nice switch, because we go from literally almost 2 weeks of outflow, because this kind of doesn't count. That was probably the holiday. Nobody happened on September 2nd. But the last almost, 1, 2, 3, 4, 5, 6, 7, 8 days, almost 9 days before that, it was just sell. Now we're getting back into the green, the buy. It's not like it used to be here, 200, but at least it's a sign that the net selling has stopped. So that could be a signal potentially that, okay, like I said, it's a bear run in a bull market. So they pushed it down to buy it at the value area, right? And as we already established, the value area is right around where that moving average is on a weekly chart, which we've been bouncing from. For Bitcoin, it's a big range, but still nice. Anywhere from 53,000, 52, where the wick was. You can even dare to say all the way to 51. If it goes there, it's still a great area. But that whole zone here, almost like a $10,000 zone, right? From 50 to 60, 61. That's a nice buying the dip opportunity zone. Back to same thing with Bitcoin, just like Ethereum. If you remember this zone over here, we dance here for a while, bounce off the moving average, off we go. I think this is what we could potentially be happening here. We're going to dance around here for a while, digest all the data from the macro. And then if it's positive and we're getting soft landing and power wins, boom, we're getting this V-shape shift out. It will be literally like Tino says, which I love. It's like my favorite formation, rise, retrace, shift out, right? Literally, you'll be getting that. You'll be getting rise all the way to all-time high, retrace a little bit, and then shift out. And this is how you end up November, December with, $80,000, $85,000, $90,000 Bitcoin again. And if that happens, you're getting $3,500 ETH, and then we're pushing upward. But for that to happen, the macro needs to allow it. Does that make sense?
It does, man.
So
yeah, back to this here. Thanks for listening.
So are we bullish or are we bearish? I'm very confused.
I love that. That's
Hey,
what matters,
okay,
right?
let me say something. That was 45 minutes of Kareem, but he was giving us the update from last week, right? So here's my take on it. We're optimistically bullish, right?
Ooh, I like that. I
Dips,
like that.
dips are in the game. We
Yep.
know that we can see a dip, but there's nothing going on that doesn't suggest we're just seeing normal cycles, right? So yes, I know the macro could affect it. We know that the election will affect it. Let's wait and see what happens, right?
Exactly.
There's nothing else we're going to do. We're in for the ride. So you know, strap
Yep.
in, right? I
And I
mean,
like what you just said, especially about the election part, because everything else I can kind of a little bit quantify with a probability. Again, people don't confuse. Probability doesn't mean guaranteed, but probability definitely helps because I've seen this market long enough and I've been familiar with those patterns that I am literally more leaning towards the bullish side because this is what the narrative at B wants also. Because remember, like I always said, Federal Reserve and Powell, at the end of the day, ultimately, they care more about the system than protecting me and you. And right now, the system, believe it or not, the system really, really needs that narrative, keyword, that narrative of soft landing. It needs it to survive because the real truth is Powell can't continue to have crazy high interest rate. As much as he wants to play the tough guy, we're going to do this, and Paul Volcker, listen, there is fucking $33 trillion worth of debt. The interest alone is so fucking insane. At 5%, 5.5% rate, bro, you next thing you know, it's already passing as our number one, almost about to be number one line item to be the most expensive thing that we pay on the budget, just the interest on that. And when you get that, that's when you reach Banana Republic, you become third world country. So in other words, deep inside, they literally are burning right now. They are burning.
Let me ask you this. If every country is like that, is there any country that's, what is a first world, second world, third world?
Well, I mean, it's what's funny is, and especially fortunately when I've been lucky to travel the world, like, I used to just fall for that narrative, like, oh, we first were in the server, like based on old antics. I'm not saying back in the day it wasn't verified, but now, because people don't even travel, they don't even get to see, then they get confused. Because to me, okay, I'll break down the old definition. The old definition was, where you are in the GDP, where you are in the sources of freedom, you know what I mean? Like people can move around freely, talk freely, like all those things that sound almost common sense. Because again, I grew up in Africa and I've seen other places, but then now, you know what I mean? I mean, the facts is just the facts. You see, especially even like country in Europe, like it's like you can't even speak freely. You can't even move around freely to some extent. You can't do this, can't do that. Remember what COVID did? Like, it's just like certain things that you took for granted that you thought, there's no way that's going to happen here. Boom, it started happening here. Then you start talking about the GDP, this, that. Now we just find out, thanks to Trump, a long time ago now, 5 years, that fake news is a real thing. They're faking the news. They're faking the data. So it's like, it's not even your fault that you're thinking that you're doing well when you're not doing well because you're even being lied to. So it's like the data is not as authentic as you think it was. And because most people don't travel, they can't see for themselves. And then part of the propaganda and the lying, and I would give a basic example, places like, if you're fortunate, I mean, I'm going to use a place that Abdul knows because he's been there. Places like Thailand, for example, right? And there's many other examples, except in South America too. They'll tell you, third world country, this, that, blah, blah, blah. Yeah, this is true. This part of poverty, there's villages, there's this, there's that. But that's not the main cities. That's not where when you go to Bangkok, when you go to like Pattaya, you go to somewhere, you see like skyscraper all the time, you see development over there, you see the tech over there, the transport, right? Back to the real definition, right? It's prosperity. How fast is money moving, a business and striving? How free the people are, and the security aspect. In Asia, you can walk around at night like super safe. Like I don't have to worry about nothing. It's just like don't have to look over my shoulder like I do when I'm in the US even. You know what I mean? Like it's just so security aspect, cleanliness, food quality, transportation quality. We're talking about basic. You go to some place, bro, the transportation sucks. You go to the metro, it's like it's dirty, it's rats everywhere, it doesn't work. It's like it's crazy, dude. You go over there, even like I'm in Asia, I wait for the bus. I'm at the station waiting for the bus. If I'm waiting for the bus, this big screen that tells you where the bus is, how far it's gonna be. Like the technology will literally shock you, and you realize it has nothing to do with what you've been told. You've been lied to. You know what I mean? And they're not even bragging about it. They still even think because it's brainwashed that, oh, America is better. And it's so sad because they haven't been. If they go, they come back, they're going to be like, what the fuck? Like, it's not what I've been told. Because even them, they've been lied to. Because their propaganda is telling, like, they'll show the best part of America, the best cities. They're like Miami's and you know what I mean? But they won't tell you about the struggle, whatever. Sometimes it's bad because I go with my friends, some Americans, they try to tell the local things like we're lying. Like, oh yeah, everybody's rich in America. There's that. And I know that feeling because I felt that when I was in Africa watching MTV Cribs and this and that. And I think everybody lived like that because it's part of the propaganda. You get what I'm saying? That's why even when you talk to your family back home,
there's like a disparity in wealth in some of those Asian countries or African countries that isn't there in the U.S. Right? Like the middle class basically is much stronger in the U.S. and North America in general than it is in those countries. There's like rich and poor, so you're living in a tarp or you're living in a mansion, right? Like,
exactly. But then when you talk about the basic need, and I agree with what you just said, but then when you go back just the basic need of the country. And you're trying to be a fair assessment because technically speaking, you were supposed to be here and I was supposed to be here. You get what I'm saying? But then when the real data came about, the reality is you're still above me, but the reality is more like you're here and I'm kind of like here. And that's when you get to really realize that, something is not right here. America's still ahead, but it's not as much ahead overall, everything combined, than what you would think. And the reason why that's important is because when you start factoring cost of living, the hustle, the opportunity, the friendliness, all the other grind, you really start to think, you know what? That difference is not that big. That I can literally just relocate. I have a really gangster nice apartment, best view, safety, everything. It costs me maybe $1,000 or less per month. America, it cost me $3-4 grand. And I'm like, I can work remote. And then you literally realize that you're just at peace. And that's what they don't want you to realize, because if that would happen, it would be a massive exodus. I mean, some people already figure it out. If you have like really good friends who travel, American, European, they'll tell you, bro, I go to Asia all the time, or I'm in Dubai, or maybe Dubai is not a good example because it's a little bit expensive. But the living expensive is not just the going out, eating, whatever. But if you can just scratch that, just regular, good location, eating groceries, whatever, safety, oh my God, it's crazy. So you got that and many other places, Singapore. So you'll be like, whoa.
I want to put a rider on that, though, right? Yeah. Because there's a big difference between traveling the world as a man and walking around and traveling the world as a woman and walking around. And I don't, in some of those countries, like I feel pretty safe, but like I'm also a foot and a half taller than everybody else and I'm not a woman. And that does make a difference.
But in Asia in general, I'm gonna name 3 countries that hands down. You got Thailand, South Korea, okay, and Japan. Those 3 hands down. I'm telling you, it's so safe, especially because I used to think, especially for women, it's crazy. They literally, I've never seen this. I'm in South Korea. Like there's more people. I mean, Thailand too. There's more people outside at night than during the day. It's freaking amazing. And I figured it out. They told me it's because it's Korea. It's hot during the day. So most people hang out at night. Like it's crazy. It's 2 a.m. and it's like you see as much people as you 1 p.m. or 12 in the afternoon in the U.S. And everybody's just chilling nice. There's lights everywhere, security everywhere, and people just having fun, dancing, drinking on the street. Like nobody's gonna come and tell you, but safely and not littering, not doing crazy stuff. They can get literally lit. They can just pass out, sleep. They'll wake up and they'll just go. Nobody's gonna come.
You're talking about like pretty rich places, though, right? And like when you say Japan, you're probably thinking Tokyo, and like when you say Korea, you're probably thinking Seoul. Like and like. Yeah.
No. Seoul is just the capital, but there's many. Again, that's not the fallacy. There's many big cities. Same thing with like again Thailand. When people say Thailand, they only think Bangkok. No, there's Bangkok, there's Pattaya, there's Phuket. There's so many. Bro, those countries have literally like 80, some of them 90 million people. Like they have a lot of people to the point where it's like the city that you're talking about is actually not a city. They're like mini New York. You just know the name Bangkok, but like the city is so big. It's kind of like, when like you're a tourist, I'm in New York, but it's like, no, you got Manhattan, you got Staten Island, you got, you know what I mean? Technically, it was multiple cities just got combined into the one big thing that we call New York. So you have a lot of that in Asia. So you be thinking, it's Tokyo. But no, Tokyo is New York. Tokyo got 20 fucking million people. It's a big, it's like, whoa. But when you add the technology, and everything, just the fact that they keep it safe with that many people per square mile, that's what's impressive. But ultimately, the point I was trying to make is like you've been lied to, and a lot of the time things are twisted. And once you get all the data, and if you can potentially relocate, you will be seriously considered. Because again, it's done on purpose to make you believe like the grass is like not greener on the other side, or more importantly, to let you continue to be stagnant and not questioning your situation because, oh, we're the best. There's no reason to improve, right? We're the best, right? But when it's like, no, you're not the best. And sometimes you have to think like that so that you can improve upon your situation instead of thinking all the time, you're the best, you're the best, you're the best. And then finding the cold hard truth later on that you're not, that innovation hasn't really been there. We're just really good at, what Warren Buffett will call like weapon of mass destruction is just, debt, exporting debt. That's what we do, financialization, but we don't really create anything. And then even if you design something, but it's manufactured somewhere else, it's just a matter of time where the manufacturer can just say, fuck you, respectfully, because I'm literally the one building the thing. Your part about the designing, I can just do it myself, right? So when you look at people like you,
does it all the time. They'll totally like make an Amazon copy of a product that's doing well. They'll be like, oh, buy the same thing, but by Amazon for $10 cheaper, and they'll.
Yeah, exactly. Now that's why in Asia you got those famous places. It's crazy what literally they have a supermarket. It's so funny in Thailand. I watched it on the news. There's literally a mall, a mall of fake designers. But the quality is so top notch, and then you find out the truth. There's a guy.
It's so good, yeah.
He sued the company because they were basically saying you sold the item for like literally almost $10,000. I forget the exact number that was. When literally the cost of creation is like literally $47. I mean, it's crazy, and it shook me to my core because when my friends talk about design and this and that, I don't want to wear fake stuff because I don't do that. But then it really begs the question: wait a minute, who's being finessed here? Because you're bragging about this thing being original and you're paying the $10K when in actuality it's just as good as the thing that the guy bought it for $47 because those are actually the ones who are making the stuff. They're the one making this stuff. It's exactly the same thing. That's why they were priding to say, listen, yes, you can call it fake because it wasn't there, but we're the one, again, manufacturing. We're the one manufacturing the thing. It's exactly the same. He said, I dare you to see if any difference. They will mimic it so perfectly, you'll be like, whoa. And you know deep inside, they use those Asian countries. Because remember, China now has a bigger middle class. They're not just, what they used to be 20 years ago. So now that middle class are basically just like in the US, requiring a higher pay because they want, better life for themselves, whatever. So some of those factories has been now relocated to where? Vietnam, Philippines, and Thailand. They're becoming the China of 20 years ago. It's also why they're getting those massive growth because they're getting opportunity. People are living in the villages. People are learning and they're ambitious. They want to better themselves, blah, blah, blah. And then the rich Chinese and the rich Asian, whatever, they go over there to shop. So now they're benefiting from that.
Or they come to North America. Like there's tons of Chinese people moving to Canada, like Vancouver.
Exactly. It's like how the Mexicans were also moving to better themselves. And then now they master the trades. And then, even here in New Orleans, for example, there's a lot of people from South America who are really, really good at construction. And then now they master the trade. They're not opening the company. They hire their people, this, that. They're better than everybody else because they're willing to do the grind above and beyond. They're cost effective compared to everybody else. And then it's like you as a contractor trying to work and trying to save money, you'd be stupid not to hire them. They get the job done. They get the job
12 hours a day without complaining. And because they've had a harder life than the people who grew up here, which is a big part of it. You grow up soft and then, you're not able to deal with the diverse, with problems.
Good times make soft men.
Being handed all the time, right? So we got to fight some days. Some days you got to live in a tarp until you can make it.
Yeah, that's why you got to balance a little bit of both. And this is why, like I was saying earlier, where it will be good to not always being told you're the best, you're the best, you're the best. Like sometimes it's like, yo, no, you're not the best. Or like how to get better, how to improve, because then you get complacent and you start resting on your laurels and stuff like that. So those are the things that, we want to avoid to the best of our ability, because again,
I mean, you could apply
progress sometimes is success.
You could apply how we might talk about self-development in a similar fashion, right? Yes, I get that. It's a big world, right? But it's really a small world, right? We're all connected. I mean, look at all the people probably watching this. We got probably 30 countries covered with people watching this video. Yeah. So we're all we all have our home groups, right? Whatever it is, however you define it for you. And of course you need to take pride in those groups, right?
Yes.
But you can also be looking at it like, how do we be the best, right? How can we be the best that we are?
Or how do we stay the best? That's also good too.
Yeah. It is kind of funny. I'm pretty sure that many people think their countries are the best.
Yeah. I mean, you got to have that belief, right? Belief is nothing wrong. You got to believe. It's kind of like when you train to be the number one, right? Anything, sports, athlete, boxer, whatever. You got to believe. If not, you already lost the game, because it's a mental game too. But then you can't just be delusional, right? You got to believe it. And then you got to be willing to put the practice, that long hours, the determination to be like, you know what? I believe I'm the best because I can do X, Y, and Z. And now you're backing up.
Yeah, just speaking to this. So globalization, whether you like it or don't like it, doesn't matter, right? I mean, it is.
Mm-hmm.
So every time we go just a little bit further with communications and the ability to talk, like 10 years ago, I don't know, like in the last day, man, I talked to somebody in Scotland. I talked to somebody in UK. I talked to somebody in Germany. I talked, I'm talking to somebody in Canada. I was talking to somebody in the Turks and Caicos a few weeks ago. But I mean,
wow.
I can talk to a whole bunch of people all over the place, right? And so you can't avoid the fact that we're going to be talking and communicating, and that's going to it's going to create really good opportunities, but also cause a lot of things. I think in the long run, I think it's good, really good, right? Yeah. I'm not for the negative new world order, like you will eat crickets and all that kind of stuff. But I definitely can see more of I don't know if there's even been somebody who's described the utopia that actually works well, but everything's dystopian when we talk about it. But I do think that the world's coming together, closer.
Nice.
I mean, if I pick up my news feed, man, sometimes I got to check what the hell they're talking about, because they're like so and so from so and so, and they sound like addresses near me. I'm getting news from UK on my feed, and similar stuff all over the world.
It's one of the safest times in history, and I have a theory. It's not going to be a very popular theory, but think about it for a sec before you respond. Men wearing dresses is a sign of great prosperity.
It's funny you say that, because I was looking at buying a Sulu myself. So,
well, okay,
yeah,
but if like in a society where people have opportunities to, do these trivial things about dress like different sexes, participate in whatever way they want, which I'm not commenting on that as a good or a bad thing. It's just the fact that exists in the world and is as prevalent it is, gives me the idea that these people have a lot of time on their hands, and that's a sign of prosperity.
And has pacified the world. We as men has pacified the world. This is also the reason why we're like women in general have more freedom than they ever had, because of what you just said. Because back in the day it was even more rougher for them too, more than even the other men wearing dresses or whatever. Because it's like we get into a point where we have that good pride. That's something I'm very proud about, to live in this day and age era. But then again, with great value,
we fight about the smallest little things that don't affect anything because we have time to, right? We'll fight about, like, I don't like it when you wear your baseball cap like that. Like, that really offends me. Like, I think that's only a baseball cap for old people. You can't wear it. Like,
can you
ridiculous things.
Can you flip your tarp, please?
Oh, sure.
Yeah.
No, but absolutely. Yeah, again, it's a combination of a lot of time in your mind, and also if people are not careful, the issue potentially with that, although again, great progress, and then those people that brought all this, they never saw that coming, because it's not their fault, because they're really trying to just better other people's life. But what can also happen is, it happens also with, like, kids of very wealthy individual in general. It's kind of like what Maddie used to talk about also too, like with the therapy aspect. It's like you lose your will of doing things. Let me explain. In other words, like, all the basic needs are met. So all the triggers of working hard that you would have got otherwise, if you needed those basic needs, like, the hustle, the grind that you should get. Hey, I'm broke. I need this. I need that with my family. I got to help my mom, my dad, because I see them suffering, blah, blah, blah. That's been taken away from you. Good or bad, because you can say, oh, it's good, I don't have to suffer. But sometimes, it's a little bit philosophical, but a little bit of suffering in a man's life is good, in a sense, because that sufferings would then push him to accomplish bigger things and do better things. And suffering not in the sense of like, oh, I'm going to die, but going through something, right? It's like going to the gym, right? You got to go through the stress to build the muscle. You can't just be like, all right, cool, I'm automatically like that. And then because that drive is taken away from you, and then what ends up happening, you have apathy, depression, because you don't even know what to do. You can't.
Yeah, exactly. Hey, listen, the struggle is real. Yeah, I'm a big believer in natural consequences, right?
Mhm.
And that natural consequences eventually correct, where we head.
Yes.
And that's what you're talking about. I mean, in a situation where you can afford to hold up in your apartment and play video games all day, right? And
Mhm.
and work really almost a part-time job, right, to pay your bills
Mhm.
and whatnot. And that's okay. I mean, who am I to judge? Is that not okay? I mean, personally, like, can I judge
Hey, listen,
somebody
as long as
because
you're
that's
being
not okay?
productive,
I mean,
that's
if they
good.
feel, if those people feel good, but then like you're saying, I'm saying to myself, well, man, I've experienced so many other things that they can't experience, and they're never going to experience. And when you get down to it, most people aren't, even though they say they're okay with it, right? Like you said, they can't see the line, like how they get from A to B. Um,
Mhm.
to so yeah, I mean, do you want to be a corporate slave, or you want to be a librarian? I don't know.
Yeah, absolutely. Because again, my thing is about I always boiling down to productivity. You know what I mean? Like, because for example, whether the person again, I used to know people that I play video game, whatever. But, they play competition, they make money off of that. They find a way to be a streamer, Twitch, this that, right? It generates money. My thing is like, as long as you're productive, whatever that you do, that's good. The thing that I can find potential issue with for the individual, again, to each their own, but just looking out for the individual because I can turn against them, is when now all of a sudden all your potential, your knowledge, your energy, your smarts, so to speak. Now you're turning your conscience and your blessing against yourself. In other words, this is where the frustration comes in. Like, I don't know if every people have ever experienced that. I thank God I only experienced that briefly, but because I'm very self-aware, where it's like you feel like you want to do something so bad, but you haven't find that thing at first, and it's like you just frustrated. If you're not careful, you can end up being depressed. If you're not careful, you can end up being lashing out on somebody else, or blaming something. When the reality is just like you just want to do something with your life, you want to prove yourself, but you just never had that opportunity. So you have that pent up energy that you just wish you would just want to put somewhere. And this is where those people, if they're not careful, you get into that stagnation. And then now what ends up happening is just a slow downhill from there versus always pushing your boundaries, trying as much, all the things that you want to do and accomplish and try and test. And even if you fail, just go and live, try things so that you can look back and say, you know what, I tried, I've lived, I've done certain things. So that way it's like, again, I look at those fundamentals as the value. So whether the person's like, man, I wanted to be a video game champion, this, that, go do it, man. Like I always tell people, like, since I was young, that's why my friend, they call me Kareem the Dream. Like, you got to dream. I've never killed somebody's dream. But you
Kareem
got
the
to
dream, baby.
have a dream. If you don't have a dream, that's what the problem is. If you just want to, like, I firmly believe you didn't just came to planet Earth to eat, shit, sleep, and then that's it. Like, no, because then what ends up happening is you start having apathy, you start lack of drive, lack of energy, and then you just don't care. And that's sometimes can be dangerous. Because even some of the psychotic people, they do things just because they don't care. When you stop caring and you turn that switch off and you become not human anymore, in a way, that can be very, very, very deadly because you in that I don't give a fuck attitude, which is very similar to the person that I know from back home, back in the day, was like extremely desperate. He literally don't care no more. It's like, bro, I'm just going to take that thing from you and that's it. I have nothing else to lose because I already lost everything. So I don't care also. So those 4 different individuals, but they can arrive to the same conclusion of I don't care anymore. And when that happens, you got to watch out.
Yeah, I can see that. A lot of this topic resonates kind of with how I came into the RH ecosystem and what I was thinking, because I was listening to Richard early on, in 17, before Hex was even a gleam in his eye,
Yeah.
Yeah, there was certainly.
Oh, shout out to Crypto Truth in the chat. He's right. Sci-Vibe. Yeah. What we're talking about literally is in Sci-Vibe.
Yeah, essentially, that's kind of what I'm getting to, buddy. Right? It's because it's about like how do you live a better life, and you have goals and you have plans, and it's okay, not no shade on somebody who doesn't want to be an astronaut, right? Everybody doesn't want to do everything, but but the basics of this is to not be a freaking slave, right? And a lot of people, that means different things to different people, but just in general, for all of us, man, Yeah, we're
Yeah,
slave,
we could
wage
call it
slave.
slave, or if you video game talk, we call it NPC, non-playable
Yeah.
character.
Yeah, that's
Because
right.
yes,
I don't want to be an NPC anymore. I
yeah,
want to be a
There's
main
lots of
character.
NPCs out here.
yeah, 'cause
Not you boys though. You guys are main kids.
you don't want to do that. You don't want to go through the motion. What do you do, man? I'm looking.
Yeah, but
Yeah, I'm okay.
but that's what it requires. It kind of requires like adulting, like have a plan about what you want to do. These are the kind of things I like, right? But so they're my words. But have a plan, have an idea of what you're trying to accomplish. Set goals, go after them, delay gratification. Of course, that's where I think Hex comes into all this, right? And crypto in general, but in particular Hex, because the way Richard had designed. Hex along with the community and all the input was to create something that would be better than hodling, right? And that's kind of where we are. And obviously we got.
Speaking of which, we got a nice little, nice little pump today for Hex. I mean, correlation to everything we talked about. The whole ecosystem had a nice little juiced up today, so that was good. I think.
What are you seeing?
All right, hold on. Let me just pull it up right now. And
I know.
Let me reshare the screen real quick. But I think that's good. That's good to talk about that as well. Because again, it's correlation with what's been going on with Bitcoin, Ethereum, and then boom. So can you see the screen?
There's a little bit of correlation in terms of liquidity because there is bonding.
Yes. Which helps a lot.
Yeah, there's a large component of this that really is people taking action. Like I see that X happened with Bitcoin or Ethereum, and I do Y on Pulse Chain. Yeah.
So a couple of things here. I want to review this part as well. Again, big investors, which are probably in the Hex as well, in the Hex ecosystem and Pulse Chain, are probably watching or know about the macro that I was talking about. So that's why it's also a great time at this stage, because if we get this nice little bounce, and then Bitcoin start running and ETH start running back towards, 26, 27, 2800, it'd be nice to start, coincidentally buying the lows and the dip right here, because as I talked about many, many times, we're revisiting those lows very, very close with the W pattern, which is bullish, right around where the points were before. So on the weekly chart, see right here, Pulse Chain, boom, see MACD cross bullish. That's a big deal. Although small, but that's a big deal. That little thing right here could be the beginning of everything. And if you think about it, right, momentum to September, end of October, CZ comes out, October 24th or 28th, we have something with Richard for the lawyer. I mean, it's not the end of it, but there's a potential avenue where we might be able to dismiss the case. If that's the case, then the end is closer. So again, this bullish stuff happening at the end of October, elections, we'll be able to know what the hell's going on. Moving into November, usually bullish. So it's like the fact that it's flipping now, markets always forward thinking, and the big investor are always forward looking. They buy when you sell and they sell when you buy. Make sense? So they'll start buying now when nobody cares for it. And then later on, when the euphoria is kicking in, that's when they'll just be, cashing out in a way where it just provide liquidity, people coming in, and then that's when they'll be able to exchange the coin back to whatever coin they want, So that's a bullish thing right here. And just looking at the technical, we're right around the zone where we were before, slightly less based on the wick, but we're bouncing right around the same zone where we were before over a year ago. So it's a good potential buying the opportunity here. When you look at PulseX, right, same thing with the W pattern. And like I was telling you guys, I love PulseX and ETH a little bit more because the W pattern is with a higher low. We see compared to Pulse Chain where the W is sitting at the same level as the previous low. This is at a higher low. It's almost perfectly textbook, looking beautiful. It literally, imagine this was because I can't put my algorithm here, sadly, but imagine this was a vector candle, definitely green vector candle, push up because the volume came in all the way, and then we just recover that right around here, literally at the wick. Bounce right off of that, and then on the weekly chart, we're already up 10%. So if you were to draw a trend line here, and if this trend continue moving into October, I don't see why not we get a nice bullish pump for at least in the 30, 40, 50%. You know what I mean? I can see some move where we go back here, previous zone, and then who knows, move towards all-time high. The same way when this quick thing happens, literally within 2 months, we were up hundreds of percent. So that can happen. When you look at Ink, same thing. What I was saying before, this is the one that's even more bullish because W pattern, higher low, same thing. It's almost like it's following my chart. It's funny. It's been here. So it's like, but again, we could have expected even to go all the way here But the fact that it bounced already, that shows the bullishness because people don't want to wait because they really want to just scoop it. Because like I said, incentive has to run first. Because if you don't have an incentive, you don't have high API for the farms. Because only when ink goes up, API goes up. So people want to buy Pulse X, Pulse, and the other stuff, provide liquidity to then get paid. So that's literally what it comes down to. And it's the coin with also no inflation in the sense of like we have maximum amount of coins, but then also it's the one with the lowest amount of coins because, again, it's just in the millions, not in the trillions. So it's just like that's another cool thing, too. And the only way you really get it as a new coin is by, obviously, besides buying it, is by farming, which requires time and money. So then that adds to the scarcity of it and easy fundamentals aspect of it, which also helps. But the fundamentals is the key. The fundamental is you need ink to run first, so that all the other coins become more valuable because as we buy them and provide liquidity, we receive more ink. So
is that the scenario?
Go ahead. Sorry.
Is that the scenario you believe will happen?
Yes. If you mentioned about a week ago or 2 weeks ago, I spent a lot of time explaining the W pattern, but and the reason why is because back to for the new people is because fundamentally this is what you need in a new ecosystem, right? Especially for big investors or at the low. You don't just want people to just buy the low. Okay, they're buying the low, but you want them to buy and not sell. And one of the best way to buy and not sell is you buy, obviously other people buy, but then you lock it in the form of like an indirect stake by just providing liquidity because you're locking away and you're earning ink. So whether the price going up or not, let's say the price stays stagnant, hypothetically, and you're earning 30% APY, that's great. In the fucking stock market, you won't be getting that. And if you were to put it in the bond market, you'll be getting 5%. You know what I mean? If that's based on the 2 years, which is about to go down. So it's like you're looking at like a no-brainer. You're limiting your risk because you're buying near the low, you're not buying all-time high. You're buying when the fractal's looking good, the W pattern is doing good. It's doing literally buy retest. Technically speaking, you could argue that it retest this high over here, broke out of there, retest here, which is roughly where we bounce out of. And then people just kind of front run it a little bit, rightfully so, because you could have a return all the way here. They're front running a little bit, which adds to the bullishness, and then shift out. Pulse X looking similarly, Pulse Chain looking similarly. And then on Hex is just a beautiful just recovery of overall, but same thing. You got to see already, it already crossed. But Hex is a little bit more heavier because, again, it's our copy from Ethereum, but again, it has way more coins, way more people. But that also means that if all those people just get back together and start believing the price are going higher, all of a sudden they're going to start locking up their Hex again really, really quickly, and then the price can pump faster. But what I like about this is that it's creating a bullish divergence, right? On the weekly chart. Let me re-explain what that means, okay? Bullish divergence means you see the MACD rising, right? More buying is coming in versus the selling, right? There's just facts right here. And at the same time, the price is going low. So in other words, people are selling more, but then the buying is very happy. This is a massive bullish divergence on the weekly chart. You can't play with that. It's not daily. It's not whatever. There's no fakeness here. It's massive because then by the time you start running and start really angling back up, let's say October, November, and start looking like this, all of a sudden, that's when people are going to wake up. But big money is already in.
Well, can I throw something out to you? Because I was talking to somebody about this.
Go ahead.
So, just real high level, right? If everybody buys and nobody sells, the price goes up, right?
Mm-hmm. Mm-hmm.
I mean, right? That's fact, right? That's what happened, right?
That is fact.
I mean, we're just saying it that way, right? So, and the question is, how does this thing move forward, right? And just in general, because we get this a lot, right? People like,
yes,
everybody's going to sell on you forever. So the game is sometimes you'll see people post this, who believes the hardest, right?
Yeah.
And so, the game is how do the people who don't believe long-term get washed out soon?
Mm-hmm.
Because we got to, I would guess we've got maybe we have as many as 10,000 people. We've got a good core of anywhere from maybe
absolutely
2 to 5,000 people. We're not hearing from them. They're not out on X.
We have definitely more people. It's just a lot of people have their kind of like wallet in a dormant state, which by the way, to some degree, is good. The people don't want to deal with the nonsense.
It's by definition. Otherwise, you're trading.
Exactly. Because you don't. let's say you don't want to deal with the nonsense and the negativity or whatever, or the trader trolls, right? You just buy your hex, you did your stake, and then you go about your day. Literally stake, date, and chill. And then you back working, hanging out with your family, traveling, whatever it is that you like to do in the real world, knowing that you did the most important thing. You set up your thing, you're watching your hex growing every day, and then you're just happy because this is what's going to happen, right? To back up your theory even more. Not only one, we have, again, bullish divergence happening right, massive on the weekly, bullish as hell, right?
Yeah,
Number two.
I hope so. This happens. I hope this happens.
Yes. Number two, right here. No, I mean, I'm just being based on facts. You know what I mean? The hater
you're looking at actual numbers, but I think what I'd like to see happen is what I think happens because of all this, right?
Mm-hmm.
Which is because of the difference in scarcity and because of an eventual change in narrative and more scarcity that we see even higher prices. That's what.
Absolutely. Because remember, even the whether it is a hater or whatever, if a good investor or even a macro trader, you know, not the day-to-day, but like somebody that's a swing trader, if he literally were to watch my videos, and now I'm going to start doing more because I don't want to give back to community and you know, and people that help me out. It's like the thing that are basically obvious to me, I'm going to come and start saying it on stream again, like I used to do back in the day, because that's the funniest part. It's like I see it, it's obvious to me, but for other people, either they don't want to say it or they're afraid to say it. Me, I will say it because it's just basically data. The same way I see all the other data. I telegraph what was going to happen. I literally was the first one to even talk about it. No one was talking about it. And then literally that same night and the next day I watched streams, people start talking about what I was talking about. The yield curve inverted. Literally with less than 2 days, the next day he inverted. I say it's going to go revisit below $2,200 ETH and push. It literally happened. So it's like, watch tomorrow. It's going to be telegraphed for one of the two scenarios based on what I said, because I literally show you the playbook. If this, then that. So it's not just like, oh, are we this or with that? It's literally, there's potential to outcome, but you will know which one it is. So you can take action based on whatever the macro, because macro is literally my thing. This is the reason why I might not be good on the hourly, 30-minute, whatever. I don't really care about that. You know what I mean? I just look at it for fun. You know what I mean? I don't even trade. I just look at it. But weekly, monthly, that's my thing because it's solid. It's things that I can rely on. You know what I mean? So now, A, you see the bullish diversion here, like I was talking about. B, equally important, matching why bullish diversion is important, is you see the volume chart right here. See right here, it says 900. Look at this number over here.
Almost nothing.
Yeah. It says 970,000, right? Volume, right? Less than a mil. So it's less than a mil, but it already up roughly 14%. Versus when it was here, it was 2.3 million. And then this was 2.2 million. So in other words, what you start to see is that, again, unless people start selling, what you start to see is that the liquidity is so low compared to before that less than $1 million is already pushing the price 14%. Make sense? Versus here, when it was going down, perfect example, you had to sell 2.2 million, more than double. And you have to sell 2.3 million here, a little bit more than double, to just lower it by 8%. Yes, it's already back up 14%. This is basic math to tell you that.
Do you think your chart is affected? You're looking at price in USD, right?
Yeah, it's priced in USD because they track Hex. I'm doing Hex USD because if I want to switch to Pulse, I'm gonna do that later. That's a little bit more advanced. That's like ratio trading and ratio stuff. We'll do that last. But I want to show you.
What I want to throw to you is this. You don't have to pull it up if you're not prepared to do that. But I would throw out to you that Hex looks even more impressive versus Pulse.
No, we'll get there. We'll get there. Trust me. We got time.
Because I think that, you know, listen, I get hung up looking at dollar prices just like everybody else.
It's just because I don't want to lose people. Because some people, they don't really fully understand the ratio stuff. So I wanted to show them on the dollar value as well.
All right, you keep going. You keep going. I'm gonna go take care of the dog. I'll be back.
Okay, sounds good. So
it's really my dog. That's not code word for something else. I'll be right back.
Yeah, it's funny.
Oh, you're really good.
Yeah, as you see here, less than $1 million, and then price is up 14%, almost 15%. Now, again, this is the weekly chart. Tomorrow is Wednesday. We still got 3-4 days before the week is over. But the bottom line is the first thing you want to pay attention to back up the thesis that I was saying about the bullish diversion is the amount of money that's being volume traded and sold down is literally more than double, yet the price didn't go down double digits during those weeks, okay? We had literally 8% here. Now, with less than $1 million, we're already up 14%. Now, of course, if people start, actively selling, that can change that. But the lesson learned here is that because of the bullish diversion aspect, which is what a bullish diversion is that a lot more selling pressure is needed in order for the price to go down and almost half the amount of buying pressure is needed to recover the candle and start going even higher. What that means is that if money start pushing the price up after everybody that sold already got sold and absorbed, it becomes quickly easier, faster way to just rip it back up because there's no more major sell wall to worry about. The same way, people are worried about the Bank X wallet, rightfully so, but that was when the price was much, much higher because it was like worth almost like back in the day, and Abdul, correct me if I'm wrong, they were almost worth like 5 or 8 million worth of sell wall. Now it's barely worth like
way lower now.
Exactly, way lower. And some of those block sales are worth like 30K or 25K. In other words, some couple 100,000 can just come in and just wash them out.
Yeah, we can burn through all those V3 sell walls in like one day if there was bullish news, right? Like one tweet from the right person and it would be done.
It will be done. Thank you so much. And the reason why we're mentioning that is because it's not just because, it's EX, whatever, but because they also move some of their money back to Pulse Chain. So it could easily just be eaten like that. And because there's bonding liquidity between EX and PX, it's like, don't be surprised when if PX start to push up, EX will follow to some degree. Because again, it just has that ratio. So that's why you're seeing the bonding liquidity acting over here as well. Boom. From the HEX side, on the Inc side, same thing. That's why the charts are very, very looking similarly from one another.
When you're saying bonded liquidity, it doesn't have to be direct pairs of HEX to HEX.
Exactly.
It could be EHEX paired with Pulse and PHEX paired with Pulse. They're going to get pulled up or pulled down together. And what happens to one affects everything. Like this ecosystem is very, very tied together, more than most things in crypto.
Yep.
So we all win if Pulse goes up, is probably a pretty safe thing to say for the ecosystem.
And especially if you have multiple coins that you want them to do relatively well. Boom. It's the same analogy that I used earlier when I was talking about how, Bitcoin was pushing up and then Ethereum wasn't getting the love, so to speak, from the ETF. But because Bitcoin was getting some love and pushing up, because you have the ETH BTC pair still in play, Ethereum is going to get some of that value. That's what people don't understand, which is so important because they're like, nobody's buying the ETH ETF. Yeah, but if people just keep loading ETF as ETF runs away towards all-time high, so to speak, and start running towards 70K, Ethereum will be forced to go back towards 3K, 4K, because Bitcoin will just drag it up. Because sooner or later, right now it's doing it slowly because the ETH BTC ratio is pushing down. But as we can see, it's starting to decelerate and stop going down as much. It's finding close to like a local low. So that way that you could easily try to shift the other way. And if you shift the other way, now it becomes almost like a leverage play. In other words, if one goes up 10% and then the other one goes up 10% versus the first one, now that one is up 20%. So it's the same thing that we're going to start seeing right here also on the Pulse chain. This is why when you summarize it all, they have similarly moved together, right? You see besides Pulse, but it's like, 7 almost 8. 7 almost 8, 7 and 5, and then boom, right here. And this is why I was in earlier today, because the day is moving, but earlier today was over like almost double digit, right? It was like 11, 14%, whatever it might be. And this is why it's so good. And those leading indicator besides HEX, because every now and then HEX get that push, but you get that ink kind of leading the way with Pulse X when you look at their chart.
Because ink is the lowest liquidity out of all those assets, I'm pretty sure. Maybe with the exception of HEX on Ethereum. So it should be easier to move ink up in price in theory if there was
exactly
to do that.
Yes, because like you perfectly said, less amount of coin, fundamentals, and the fact that besides what you already have, so to speak, and you bought, the only way you get a new coin besides buying is literally you have to farm and then get it. Yeah. And usually the big player who get the most of the ink are usually the big player doing the big farm, and those they don't just take the money out every day.
No. They're less likely to dump it. They're more likely to do something smart with liquidity.
Exactly.
Like to actually participate in the ecosystem and not just make red candles, make green candles. They're gonna LP in and LP out is
exactly, which is smart and create balance in the system. And usually at that big level, they're looking for bigger play, multiples, you know what I mean? Multiple X's, not just like a 30% here and there, because chances are they're already good. Chances are they sacrifice good. So it's like, at local price or where they are already, they're living good already. They're just looking at it like, how do I support the system? And then how do I make it so that later down the road, once you really, really thrive and more adoption comes in and green candle, which attracts more green candle, which attracts more people, then at that point, if they're going to cash out big amounts, so to speak, there's enough liquidity for that, so to speak. Make sense?
Yeah, for sure. And I think the, for ink to be the tip of the spear is something that I'm curious about whether that'll happen, whether that'll be the one to pump first, because people will have to buy the other things, Pulse X, Pulse, Hex, etc., in order to farm ink, which will make those things pump, right? I wonder if that's the, like, if you were to, I don't know, if you were a whale who had $80 million to put in, putting it into ink, would that make the most sense to pump all the things? What do you think?
Well, my main assessment is whoever powers that be that wants the ecosystem to thrive, because I want to talk about two separate type of like potential big buyers, so to speak. But that doesn't mean that they both don't have similar interests, right? So big buyer one can be literally feeling like big buyer two, but I just want to separate the two first. Big buyer one for me is like somebody that wants the ecosystem to thrive and win, period, right? That person is naturally incentivized to pump ink first. Why? Because it will make all the LP API look good. Makes sense? And even better, which they attract more buying because that's the coin that's being rewarded as you farm, correct? So if you're getting, hypothetically speaking, you're getting 30% APY on your farming currently, and then all of a sudden somebody comes and double the price of ink. All of a sudden now that farming is doing 60%. Makes sense? So now the APY has double. All of a sudden it attracts more people to come in. Because
here's
now,
the fun thing, Kareem, as a thought experiment. Mm-hmm. Like, let's say the APY right now was only 40% on something. If you receive the ink token and you don't sell it, and this would work for other farming apparatuses too, and then the price doubles, then retroactively you have 80% APY. So for people who are farming and holding, I think, and that goes for other ecosystems on the Pulse chain too. If you
absolutely, this is so funny. I have to look at you in the face to tell you this. This is so funny. What you just described, my friend, is literally hex staking in a good way. This is what I've been telling people where it's like, I only worried about the price when it ends, right? My stake used to pay me $30 a day. And then at the near all-time high was doing almost 10K a day. But I never sold, right? So all those $30 are worth 10K. Now, obviously, price is way down. But the point of the matter is, again, I'm still playing that long-term game. It just minus the one that I lost, sad, whatever. But if my game plan is price 2035, 2032, whatever, 10 plus, then all those in between is just noise. Do you get what I'm saying? So literally, to some degree, I'm doing exactly what you just said. And this is why, for me, it's like price only matters down the road. So when I was doing my analysis,
retroactive APR, like you can pick the time you're going to win and take that.
And my retroactive number, those who know obviously knows this already, but for the new person who don't know, my retroactive price when I started my stake 4 or 5 years ago with my strong belief, which I still have to this day, was like hex is going to be $1 up. So every time I was doing my math, longer pays better, the yield, the daily, how many hex I'm generating, I'm looking at it like every hex is worth $1. So that's why I was salivating, even though I was getting my whatever, this many thousand, I'm like, okay, cool. We're going to get to a day where it's going to be like that or more. So this is where I'm building up for that. And to me, I see the value for that, which is why it didn't make sense for me to sell below that. This is why when I stake longer, I'm like, okay, I'm going to deal with the ups and flows and whatever. But if I can make it to that promised land, right, the theory, the golden yacht, when we get there and we have enough sufficient liquidity, because, many years been going around, many cycle, Bitcoin's probably going to be ideally, we don't know, but let's say ideally in the couple $100,000s of dollars, Ethereum 10, 15, 25K, we're definitely in the dollar plus. Possibly even more. I'm just lowballing it. You know what I mean? So that was my analysis saying I don't need to worry about the price. I just need to accumulate as many hex as I can because the price will take care of itself when the liquidity build up. Does that make sense? So that's why, and I'm glad you said LP. Because it's very important because those people, yes, they get the money right away. They could sell it. But if they hold it, they essentially are like hex takers in a way. In a sense where they're adding to that scarcity because they're not selling it. Because people think, people just farm dumb. I'm not saying it hasn't happened before, but those who are looking for the solid coin, especially if the price is depressed, and they've been doing, and I'm going back to the chart real quick, they're gonna look at it like, oh, nice, that's cool. They're gonna look at it like, oh, because the price was way over here before, literally in the 50, this is ink, right? $68 or when you double top right around, $10 is like a good point because so now you're looking at when they were looking at sub dollar or sub 50 cents, they're like, it's a no brainer. They're just buying the head out of it. You know what I mean? And then same thing like they're buying over here. When we're over here, you see the volume because they're like, oh, this is juicy. Let me sell. So imagine a bunch of people buying here, another bunch of people providing liquidity like they bought here while they're just accumulating, and then rise, retrace, continuation, right? Again, Tino's
when
pattern.
you say providing liquidity too, when in this context, look at these farms.
Like doing a farm,
they're compounding, right?
Yeah, they come exactly.
Right? So
they bought the ink.
They're getting yield, and then they're compounding that yield by putting it back into the system. Which
exactly
you could win on that, or you could lose on that. There's risk, but it's it is one of the plays.
Yeah, but you have lesser risk when, let's say, you bought it so low that you're already so much in profit that, let's say, your initial price point is in this vicinity, and you bought so much of it that even when you get here, you're still in profit. But while you were waiting, because again, this is a weekly chart, guys, weekly. This is literally like almost a whole year. This is January 2024. So literally almost a year, 10 months went by, and then all you were doing is just providing liquidity, earning yield at a high clip. And then now what ended up happening is that as you're providing liquidity doing all the LP, you never sold. Let's say you wait for the next run. And then once you start getting that vicinity here, the bull run 2025, moving into 2025, which is right here. And we're in this zone, double digits and up, 20, 30, 40% ink. And remember, as it goes higher, just like a parabola, it goes higher faster because less coin being sold. If the big money has most of the coin because they're most of the pool and they're most of the LP, right? If I'm 10% of the LP, as people sell and I'm staying into the pool, I'm becoming the bigger portion of the pool, which means I control much more of the creation of the new ink being displayed on the market. And if I never sell, I become like a mini OA address in a way because everything new gets sunk onto me. I don't sell. I control price pushing higher. The swing trader shows up because they're gonna probably draw a line somewhere here and they're gonna say, "Oh my God, it's a breakout!" And then they're gonna do this right here. They're gonna help you get to this zone, right? And then once you're in this zone,
you know what would help that, Kareem?
Go ahead.
Is the announcement that holding ink gives you some sort of power?
Yeah, if it became a DAO token, you're gonna vote on the next pool to get yield, or anything beyond it just being a token with the utility of a billionaire buys it sometimes. I think that would be cool.
100%.
I think the basic utility would just be us talking about it because I see what you're saying, but we can create that utility without creating another coin because I can create another, sometime confusion for people. Oh, another coin, this, that,
there doesn't have to be another coin though. There just has to be utility for this coin, right?
Let me tell you about
code.
Okay.
Yeah. The code's already in there for it, right? And and it doesn't have to be already built either. Or something else could be used to do some things. But here's the thing, right? There's this other protocol out there called PHEX, and you may have heard of 2 PHEX before as well. And Kareem, I know you may not be involved and know too much about it, but as an example, there's a token out there called 2 PHEX, right?
Okay.
And if you own that token within that little ecosystem that Mr. Fast and another few people maybe have put together, you can lean into providing. You can actually direct where the rewards go, and so they have incentivized pools, right? And so what we're seeing in practice, in reality, what we're seeing is big players accumulating monster amounts so they can incentivize the pools that they want. And so what Fast is saying is, hey, listen, and that's why I brought up the subject. If we turn in that direction and all of a sudden tomorrow, having the ink token gives you some sort of power to decide what the next farms will be, what the next single-sided pool might be. It could create a run on the market for that.
Yeah, and there's precedent for it with it's like PulseX is a fork of PancakeSwap. PancakeSwap has some, quasi DAO functions and voting functions that, could be ported over to PulseX for sure. So, to say that one day the ink token actually will have governance utility or, just some of the utility attached to, to the farms is the most likely thing it's far from impossible. But even if it doesn't, obviously it has community behind it. So, like we have something going on there. And there is utility in that there are farms where you can farm the ink token to make more ink token. And that's not just on Pulse Hex. Like 2P Hux also has farms for ink, and so do other protocols. So when you have something that's being supported by the community at large, it kind of becomes its own store of value token that has utility, even if it doesn't actually have any coded utility. But both could end up being true, and then that would be happy moon time.
Yeah. It's good in a way where it goes back to what I was saying earlier about the big well 1 and big well 2, because you just defined that function that I was talking about. Because why I was also saying, quote unquote, we don't need a new coin is that it's about creating that utility that you were talking about, that incentive, literally like the name. So by literally just, again, no financial advice, but wink, by whoever wants that create that utility without creating a coin, by just pumping and injecting funds primarily into ink, will naturally create that utility, because now people will realize, oh shit, API, all those farms just got bigger, better, double, because the value went up. Number 2, even if some people, let's say, quote unquote, cash out and sell the ink, that power at B can just keep pumping, because at the end of the day, it's like, okay, congratulations, you cashed out the ink that you farm. Good. Let me take that from you. Now, all of a sudden, you sold all those ink that you have a big bag of. I'm glad that I bought it. I mean, see, hypothetically, I'm that that big well, so to speak. Again, no financial advice. Now, all of a sudden, I'm buying a lot of ink at a cheaper price. Meaning, if I'm thinking to push the price all the way back to the double digits, $10 and up and 25, I would gladly buy everything from you at $1.6, $2, $3, because you will be selling all those ink you have been farming for years. I'm gobbling all of that. Now I'm creating another supply shock. Now I'm pushing the price even higher, which then incentivizes new people to come and play the farming game by buying Pulse Hex, and probably ink too, because again, the real liquidity, you need both sides, right? So you need ink as well. You can't just buy all Pulse and then trying to, unless you're trying to farm Pulse versus Pulse Hex. But the point of the matter is, I'm creating the behavior that I want to see by creating the green candle initially, trigger people to sell. The people say, I buy more, create supply shock, push the price higher. Now the API stay higher for longer, and the only way people can push the price down, because I'm holding all those coins and I'm not selling, is by literally the test of time, farming, waiting days, weeks, months, collecting the new ink, and then cashing that out potentially, or keeping it, or cashing that out potentially for value. You see what I'm saying? So that could be seen literally right here. Price went so low here, everybody panic sold, bought a shit ton over here, then push the price up, create incentive to trigger people to sell again. All the people who are accumulated here, sell. Test the market here, sell. And now that the sale are getting exhausting, as we saw on the MACD, like I was showing you, because it's all buy right here. We're just waiting, but like it's not really going down. It's like dancing, but at any time it could just flip. But we already seen the flip by looking at the MACD on Pulse Hex and the MACD on the, see right here, very close, no, on X specifically, because a lot of the selling also came from Hex, but it switched over here already. Same thing with Pulse Chain. MACD is very, very close to switch, or has switched literally by 1. So now it's getting ready to push it up. And what's going to happen is, because all of those have absorbed all their respectful sell pressure, now ink as the leading indicator, which is the reason why, like I said, in this W pattern, which is bullish, he's the one with the biggest higher low, because from the low to the current where we are.
Is that bigger? Is that bigger than Pulse Hex?
Yes. You see right here, say 205, 205%, right? Between the first low to the new low where we bounced off. And then you look at Pulse Hex, I'm talking about percentage gains, you will see it's a little bit less. You'll be like somewhere around here to like, see, 60, 70%. Now it's still bullish because it's a W with a higher low, but 60, 65% versus 200%. I mean, the writing is on the wall. But then again, it makes sense because you want it to be incentive. This is how it keeps generating those 30, 40% APY. And then what ends up happening is when you start having people incentivizing and people coming into the pool, right? Pool was at 30-40%, like the pool that I talked about a lot, which is literally the best pool, rightfully so. Now has one of the lowest API. It's good. That means people are listening, they pay attention. Because just like I said, ink is the leading indicator and pulse Hex is the most oversold. Out of all the coins, I mean, Hex is the anomaly. He's going to do his own thing every now and then because it's so oversold. But let's say Hex is not in this equation. We're just playing liquidity again. Clearly, those two are better than pulse. Rightfully so. Because this is the incentive. He has to lead the way. And this one over here is the most oversold. And he also has buyback and burn. So when volume kicks in, Hex is indirectly helping pulse Hex by creating massive volume. The volume kicks in, $534,000, which help building some of the pulse Hex over here as well. So this is the reason why those two coins are the one pumping the most. This is why I said if you're going to provide liquidity to one, I suggest ink pulse Hex. And here they are generating the most. So now you can say that your average high in this case is literally 7.5, because they're both moving at a similar rate, which then goes back to what I was saying. Abdul was saying that too, which is you don't have an extra risk on your impermanent loss when you already decide the coin that you wanted to accumulate from. So in other words, and especially if it's doing 7.5 both, there's zero impermanent loss because you just went up 7.5% on both coins. So you didn't really lose anything. Yeah. And even if one was
the yield though, because I think the yield is a relevant portion that you need to look at, because you'd offset your impermanent loss by the yield anyway. All right, like that's part of the equation, right?
Exactly.
It is.
But on top of that, you have zero because they're literally moving in tandem. Now, is that always going to happen? No. You might get a situation where it's like one go up 20%, the other one only go up 8%. But still, if they're both moving up in the green, big time, 20 plus 8, you do the average of that, you're still moving up as a combine of anywhere between 12 to 14%. So this is the reason why I was also saying better those yield farms than, related to the USD. Even though the USD has a greater potential yielding value.
Let me throw this at you though too, right? Doesn't the timing make a difference, right? What your time frames are,
well, and the reason why is because I studied the charts.
Yeah, I mean, so the farming, there's some strategies behind it, of course, and of course there's the strategy of, only provide the farming when prices aren't moving, and this way you don't
exactly when he's in a range bound. Great point, because same way you were saying to back your point, if we're over here, I probably will farm with the USD. Because I'm thinking chances are, you see, nice pump, accumulation. We're trying to pop out. But if we fail, this looks like a rising wedge. So you put let's say hypothetically, you put something here. I'm just doing a little butcher version, right? And then you wait. The moment this breaks, you're like, all right, cool. Chances are we're going to retest down because it's an imbalance here. This is a vector candle, green, pump too fast. Imbalance meaning that it's not natural. That's one or two big actor pushed it up. The same way, the way how fast this went down, this is one or a few actors. Those are vector candle. Clearly, you can see that. So it's going to recover half the vector, which it did. Then he went by here, but then he created a higher low, maintaining the support. And then somebody came here. This was probably a triangle over here. Then he popped out of here, and you thought, maybe he's going to go here. And then he just went. So that was a vector candle. And then we have good announcement right around that time too. The same way we have big announcement here. But then the people who bought over here, they're probably like, yo, we're just going to sell. So you see how he tried, they failed, but it was a massive volume candle here too. But then now you're getting volume candle back to back. But now the green turned to red. It's not good. If it was green, oh, yeah, off we go. Because it's buy, don't sell, push higher. Rise, retrace, continuation. We literally were supposed to do that. But then
if we have 2-3 good months in a row, that chart would look so different. Right.
Exactly.
And I think that could be on the horizon, like that.
Look at that on the monthly. I mean, the month just started, but look, we have literally 1, 2, 3, 4, 5, 6 red in a row, bro. Unheard of.
We're due. We're born
to do. And we're balancing out the low. I'm gonna go out on a limb and make a bet for us. I don't know about unless it's a market crash, election, Trump gets shot, whatever. This should be a green month. I think it's going to do something around like this just to test the water. And then next month and moving to November, if we get bullish news about what's going on with the court case and stuff like that, I think we go into rally mode. And it will be a perfect timing because we get the good news. CZ get out of jail. DeFi is back on. Hopefully, Bitcoin is around back to all-time high or near that. Interest rates are around 3% or lower, so we don't worry about the Fed. You know what I mean? Inflation is down to 2.6, trending back towards 2%, so they can turn on the printer. So you see, you need all those things combined, and it looks like it's going to come. But like I've told you guys last week, the biggest problem with people is they trigger happy. That's why they trade. They're like ADD. Like I told you guys, all you guys watching, and thanks for still being here. You guys are always 99% right. I kid you not. I'm not blowing smoke up you. You know what? You are 99% right. You've been in crypto long enough. The problem is your timing is 99% wrong. That's usually what ends up happening. You get trigger happy. You see about the global liquidity. Oh my God. And then when the pullback comes that you didn't expect because you forget about the other macro stuff, you get wiped out. And then you cry, rightfully so, because the chart end up doing what you expect it to do, but then you have no more coins because you got liquidated. And this is the thing that we have to teach people how to avoid. And that's why patience is key, because the big investors, they master patience. This is why the saying from Warren Buffett, right? The impatient pays the patient. That's all there is. How many people we know, respectfully, right, who are probably panic sold over here? Oh my God, it's going to make a new low and it's going to be, they don't zoom out. They don't look at the weekly chart, let alone the monthly chart. They don't look at the fact that, when you zoom out and you look at the MACD that you already crossed, that we actually entering bullish territory. They don't see the massive bullish diversion, which is, buying pressure coming in as the price was going down. I mean, this is textbooks bullish diversion on a weekly chart. No joke. The bigger the time frame, the more solid it is. You know what I mean? So you see that on Pulse Chain. You see that on basically almost all coins, because again, the bounded liquidity, rightfully so. So this is just a matter of time. It's going to cross. It's just like, technicality, but you get to see when it's like low pink, it's like the selling is less. So that means it's a change of trend, right? It did this on the stall, and it's about to do this. I wouldn't be surprised by the end of the week if it continue to go green, or next week, this thing's going to poke itself out here and be green. Same thing on Inc., which is the leading indicator. You're going to be able to see that as well. It's like, it's very, very, at any time it could just pop. The moment it pops, it's going to go. And you better believe there's some people that trade based on algorithm. They're just waiting for the MACD to do certain thing or the price to do certain thing. And then all of a sudden, you will see people tweeting, so many million just got the Pulse Chain and da-da-da. And then it's like, but it's too late. You reporting the news, but are you in? Did you buy? You didn't? All right, cool. You missed.
Yeah, but that's part of the whole attract retail.
Exactly. So now you get to see what is going on. And then back to Pulse Chain here for a second. Another thing that I like is that it backs everything up, and also the DMI is showing me something that I always wanted to see, which is like the selling pressure. For people who don't know, right? This is DMI, my favorite indicator, right? Directional moving average. It's literally how you can literally tell what the market makers are doing, right? With your DMI, you can even spot the bullish diversion too, right? So green was a buying, orange is a selling. This is when the selling got greater than the buying. We crossed. That's when you knew. Let's say you were right around here, and let's say you missed this. Okay, you didn't sell. Oh, it's gonna bounce. By the time it got here, DMI flashed red saying that there's more selling than buying. At that point, you would just exit, and then you would just wait, and then it pukes. But then now the good news is, as a support line, draw it real quick, which is cool. We have a nice little support line right around here. Because let me see if I can zoom in. DMI came in, bounced here first, then pushed up. Didn't cross the orange, but the buying came in, but the selling was still greater. Then he comes right around where we are, and it looks like it wants to bounce, literally right around that same zone right here. It's making a W pattern. Literally, I'm seeing pattern everywhere. Imagine this is like a W. Puke, puke, puke. The blue line is the buying. And you get to see how, like, it didn't even go lower. It didn't even retest that same zone that it was over here. It's a little bit higher. Again, this is weekly chart, guys. And he already looked to switch. Once he crossed the purple, shift of momentum. That means that the buying is coming in for real. Now, what's going to happen is as the blue start to rise up, the orange is going to start to trend down. And, of course, the ultimate signal is when this cross over here happens somewhere over here, but inverse, which is the selling kind of goes down as the buying comes up. And at that point, right around October, November, that's when people are going to go, oh, my God, time to buy. And it's going to flash green. But the real cool thing is to see how it's making double bottoms over here. The buying is making double bottom, which means that it wants to come because he stopped it over here in July. He tried to retest, but then he pushed higher again. Getting really, really happy to trigger this thing and push it higher. And when they push it higher, it could be a violent move. It could be like this, right? You were like, oh, yeah, nothing to see here, right? It came in, a little retest, didn't go lower, stay. And then all of a sudden, within 1-2 weeks, it just do this. And then by the time you react, it's too late. You have to spot the move when the move is in formation. That's when you got to pay attention. And then when you take this, you look for what's called confluence. That same zone here confluence with what? Boom, confluence with the bullish diversion right here. You get to see MACD closing back in, turning green. Boom, as the price was rising low. That little blip that I was talking about right here, that little blip blue, guess what? That's the 2 weeks pump we got over here, which was nice. It was something around like, what is it, 30%? It was a nice little chunk. Yeah, about 30, 35%. So I know it looks small here, but remember, it's weekly chart. That little chunk here is 35% pump. The same way right now, we're starting a mini version of that right now. But as we're making literally double bottom over here, turning the MACD in the balance of probability, it means that we are most likely to go up than down. Again, all is in the chart, all is in the facts, and it's pushing higher with low volume, which means by the time volume comes like this, we could have a candle like that, which was a 100% candle. We could easily and just leave people.
Yeah, what do you call that? Price bias, right? Recency bias. The fact that so many people believe it can't happen when you're looking at the chart and it happened just a few months ago.
Yeah, and that's what you want. You want people to be offside, to think that it's over and this, that, and then boom, they get left behind. Because those are the people that end up chasing the candle later on. You know what I mean? Because they didn't buy. Chase.
Abandoned ship.
Exactly. And then once they chase, obviously at that point they create the rest of the candle, because as they chase, they're chasing what's left of the liquidity, because most of the liquidity has been purchased, has been bought. So by the time the person is testing the price up, what he's doing is, all right, I've been buying all this thing over here. I'm starting to push the price up. I want to see if there's some leftover sellers out there that I need to flush out. And usually what ends up happening is, if you start to pump and then all of a sudden it
truly is a game.
Exactly. So if you start to pump it, and again, the week is just starting. We got to wait until the weekly close at the end of the week. But let's just say hypothetically, if you start to pump it a little bit, price move up high because against low liquidity, but then you start getting candle like this or big rejection, then you know there's still a lot of sellers in the market. But if you continue to push it higher, easily 15, 14%, but nobody's selling, chances are those people who sold already sold, or some people who bought, they're waiting for a higher price before coming out of the woodwork. But it's how you testing. It's like art of war, right? The general don't just move the army like that. He send the recon first. We send the recon. Those are the recon guy right here. The scouts, they go in the sea and they come back to report to the boss. They say, boss, it's clear. Then we push higher. But if there's still a bunch of people, nah. And remember what I've been saying for weeks. Counterintuitive, but very important. For people to buy, people need to sell. For people to sell, people need to buy. In other words, you see massive red candle, but those massive red candles, you see $83 million volume, insane. 63 million, 35 million, 36 million. Those are massive volume candle. Yet the price is not going to zero. What does that mean? That means as those people sold, a lot of people bought. That's the thing that people don't understand. So big money who push the price out like that. Yeah, push the price out like that to flush out the people that want to sell and exit because they think, hey, I missed sacrifice sell over here. I've been dealing with this whole bear market for a year and a half. Then I'm triggering this over here to get you happy, to see what's going to happen. Then I'm pushing towards the same zone over here to see who hasn't sold yet that wants to exit. And then usually, in best case scenario, the buying outweigh the selling, and then we just buy them out over here, and then we push higher. But then if the selling outweigh, that means, okay, we still have a lot of sellers that haven't exited yet, that don't want to be here long term. So in that case, what do? I stop feeding the system. I just let it puke out. I flush those people out.
Well, we still got a lot of people that need to be flushed. But,
Exactly. But the good news is, but again, this is like March 2024. As I am flushing them out, very importantly, it's not like I'm not putting limit orders here, 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 here. It's not like a regular shitcoin. Everybody knows this, bro. Forget $80 million volume. You put 50K, the fucking chart, excuse my French, is down 75%, 80%. It goes to zero so fast, you won't even know what the hell happened. Yeah. This thing is solid. $83 million volume on a DeFi, people. DeFi. This ain't no exchange with fake volume, all this bullshit. We're talking about real volume, provable on chain. You know what I mean? So that's what's happening over here. People cashing out or whatever, but they're getting flushed out. They're getting flushed out to the point where the volume gets absorbed. Then when you get around here, what is this? 10 million, 12 million, less. 9 million. See, it's at less than 10 million. It's good. Then you get a little reaction here because we wanted to test the system. A little 12 million push just to see if people were still flushing out. And then more came out of the woodwork. Look, the volume rised again. More came out. Okay, sell. All right, that's fine. But now the volume got even lower. Test the market again. volume is low. The sales are coming, but the volumes are getting lower and lower. The volume over here, sell, is not the same volume over here, sell, which is not the same volume over here, sell, which is not the same volume over here of sell. And it literally paints the picture about why the MACD looks like this. And this is why the bullish divergence is by definition. Selling pressure being absorbed as the price is going down, but a bigger move is being prepared. Because when it gets to a point where what's left of selling is so tiny, I'm going to flush everybody out, push it so hard, so fast that by the time I'm buying all the sellers out, whoever hasn't been in a position has to now chase. And what's going to happen is this is how you get back-to-back green candle. Because you set the new floor, right? Let's say right around here.
Yep. Well,
and then everybody else catch up.
People get attracted to those green candles, and then they come in and buy the tops, right?
Exactly.
That's why
but the good news is now you're creating foundation, because as you flush those people out and you push the new flow over here, you know that becomes a solid flow because the other people don't have enough economic energy left, so to speak, to push it further down. You can keep it here, and then the FOMO tards comes in, and then those people, chances are, once they buy in around here, they're not going to sell below their entry price. So now they're more interested into pushing the price higher. And it actually helps them too, because low liquidity with their quote unquote little money compared to the big money, they can still push the candle price 5, 10, 15%. Because now on low volume, it's easy to push the price higher. Make sense? So they can generate profit to themselves. Next thing you know, we're close to sacrifice phase. Next thing you know, we're 2x, and then we start rising.
100%.
Does that make sense?
It does to me. Yeah. Hey, thanks for sharing all your.
That was good.
You're very welcome.
Your
one last
and the follow-up from last week. I mean, we're getting ready to close out, but what else?
One last chart for you, Crispy, because you're talking about the showing them the ratio. So we end with that. So which is good. And thanks for everybody being here. I've seen something in the chat. Someone said there's 1,000 people live. I was like, wait, what? Okay, that's cool. I guess we must be talking about good stuff here. All right. So one last thing.
Getting higher. We're going higher. Almost 1,100 now. Yeah.
So as people know, as I always mention, if you're gonna provide liquidity, where I will put my money in, you know what I mean, if I had it, will be literally Inc. and PulseX, like I said, because they have the most bullish W patterns with a higher low. And also because when you look at it ratio compared to Pulse, which is what I like, I'm still waiting for this chart to break out. So you see, I'm saying there's a support. We went below that, we recovered the support. This is ratio Inc. to Pulse, right? And just for people to realize for the first time, sometimes the ratio will go down aggressively. That doesn't mean Inc. is going down. It's because Pulse chain is pumping too. But then what ends up happening is Pulse chain will pump first sometimes, inject the money because it gets bridged onto Pulse chain. And then Inc. gets pumped. In other words, Pulse get bought, and then the Pulse then buys the Inc. to provide the value. So this is why you see the ratio goes down first, then the ratio re-enter the zone. But sooner or later, I'm expecting to go back over there. Because just like how we had back in the day for people, hold on. What the hell's going on? Let me go back. For people who are new and never saw, hold on. Wait, why is it that? Oh, sorry about that. 1 second. Pulse, weekly charts. Yes. For people who are new, back in the day, right around here, I have to do daily to show it because it happens so fast. It's the same motion, which is Pulse. Oh, stop. What are you doing? What is that? What is this happening? Sorry about that. I'm going to try one more time. Oh, my God. Ink. Okay. No, that's not the chart. Come on.
Oh, boy.
I'm going to do it from a distance. Sorry about that. So, boom. And then we're at Pulse. Back in the day, in the beginning, I'm not going to move the chart too much. This is what happened here. Pulse chain got pumped first because we just launched, right? And then all of a sudden, as Pulse chain was getting pumped as the better coin in the beginning, this is why this ratio was going down. And then all of a sudden, Pulse chain becomes so valuable, which is good. Then the Pulse chain started to feed Inc. to create the incentive for people to start farming. So that's why Inc. shoot up so violently, ratio was against the Pulse, rightfully so, to create that incentive so people can go into farming mode. Because at first they were playing Pulse chain and making some money. Then it's like, all right, cool, let me go park my coin so I don't play with it all the time. And I need to park it somewhere productive, right? Because I don't want to have dormant capital. I need to be able to, like in the real world, you want to buy income generating assets. So what do you want to do? You want to have that farming, and somebody need to create the incentive. And what's the incentive? Was to shift the pulse into ink, push that ratio way high, make the ink so valuable, almost at a crazy ratio. And then the ink started to slowly feed everybody in the farms, rightfully so. But then it got to a point where it got around here, reaches the reasonable zone, and it was supposed to rise back up to feed the next round. But then people start to panic dump for no reason. And then we go into the bear market, all this other crazy stuff, lower volume, because people were just farm dump, not even caring about how this worked. It became so oversold. That's why the chart has to go like this. Look how stupid that is. That then, rightfully so, the smart money wanted to wait here to buy a shit ton of it to then push it back up. And although we're at a high compared to here, we're still way lower compared to here. But let's just say this is exaggerated. But even compared to here, we're still way. See, 71,000 ratio. It's almost a double from here. But I know we're going to get around the zone of where we were when we start, which is right around here. So if I were to draw another little horizontal line here, just real quick, right around the average of the two, it tells me, that's why I put this little chart over here, that just in terms of ratio, ink and ratio, pulse chain, 100% easy in its sleep, possibly 150%. What does that mean? That means if pulse chain do a 2-3x, then ink can do a 7x. And this is the reason why last time around, and I'll close with this, when we were running around sack rate, right, and above, ink was almost $10, and Pulse X was around sack rate, and this was like 1.1, 1.2. I expect this to happen again. I'm not saying don't buy Pulse. I'm just saying just know that there's a high chance that this thing's going to pump first. Rightfully so, it has to. But everything else is going to catch up. The same way as you saw the ratio gets crazy imbalanced because the incentive needs to be kicked in. But then after it gets crazy imbalanced, it always reverts back to the mean. That's why ratio trading is very dangerous for those who don't know how to do it. Because whatever bias that you think is going to happen based on the thesis, which is true, it's always temporarily. It goes, then it reverts to the mean because then the other one just catches up. You know what I mean? Because they have bonding liquidity. You can never get to a situation where it's so out of whack, the other one gets killed.
I'll tell you, if what you talk about happens, people will be pretty excited. It'll be an exciting day.
There will.
On the Pulse.
There will.
Hey, you know what? You know what I found out? There's somebody I know who has a new YouTube that focuses on the farm report. Who's that? Who might be reporting on farms? Anybody?
It's me. Yeah, no, I'm working on making more and more episodes, just focusing on farming on the Pulse chain. And I've done several so far. Last one I was doing like ways you could leverage Hex, because Power City's got like a protocol where you can turn Hex into stable coins, and then you can take those and farm, and you still hold your Hex position. Obviously, there's some risk with those kind of things, but we have all these tools in our ecosystem that we can use to leverage our positions. If you learn how those things work and you're ready for it. The Pulse chain has everything, right? Like we have a GMX fork, we have an Aave fork, we have a convex fork, we have a balancer fork. It's all here, right? So, and like all the Richard R tokens are represented in all these different protocols, and it all works together. So we're in this together, and farming is a big part of what's happening on the Pulse chain right now. Low fees really helps the math, right? Like you don't have to go all in. Like you could have $50 in a farm and you're paying 10 cents a transaction fee, right? So on Ethereum, you don't want to have a $50 farm because you could be paying like $300 to unstake your farm one day, right? I don't think that's going to happen on the Pulse chain anytime real soon. So it's it's fantastic for that kind of stuff.
So if somebody's interested in seeing that, where do they need to go?
At YouTube / Pulse Jitsu. I'm just gonna drop it in my name here.
Yeah, drop in your name. Drop it in the private chat. I'll post it for everybody.
Sure, we'll do.
Interesting. Yeah. All I will say on that is, again, be careful when you're playing with leverage. Again, this is a great tool, but a great power comes great responsibility. Be extremely careful. The reason why is because, especially leverage is already, as you guys know, right? The 4L, right? We added luggage to it, right? That's one of them. Be careful. And then when it's low liquidity, be even more careful because You don't know which other fish is probably counter trading you. And again, what did I say earlier? You could be right and still get liquidated, and then the price do what you expect it to do. It will literally just wick you, take your money, and then goes where you were supposed to go. So be extremely careful. Listen to what Abdul said. Very important. If you're gonna play that game, I'm not, but if you're gonna play that game, don't take the whole bag. I know it's common sense, but I think we need to say it to really people to understand that it's very dangerous. Some of the things that I like to talk about is more like, obviously everything has a risk. Life is a risk.
You know what? You know what isn't as dangerous? Taking hex.
Yeah, but it's a great tool to have for those who are interested. Those who are interested, those who are sophisticated. Hey, go and have your field day. Don't let me stop you. But again, just know the risk. Very dangerous.
They just need to learn and press the button slowly. Make sure you actually understand what you're doing. But like the tools are here, and when pros come from other chains, they're gonna find stuff like that. Be like, oh, okay, I can buy hex and turn into stable coins, and then farm with the stable coins. Like that's one of the options that we have, and it's not magic; it's crypto, right?
Yep.
So
because Maddie said we have over 1,000 people live, so I'm sure hopefully some might not even be Hexkin, some could be new viewers. So it's like for those interested into that, it's good that we remind them that whatever you think you have on the other chain, we have that at Pulse Chain too. But we will remind our core viewers that the risk, because some of them they don't know this stuff, and rightfully so. They shouldn't even be bothered by it. But if they want to play it, just be very careful, because we don't want people coming back. But I got liquidated, this and that. You want to be very careful.
Agreed.
Hey, with that, I'm going to say this: we are running. We're almost into December.
Shout out to everybody in the chat.
2039. Almost to December 2039 as far as hex stakes go. We're closing out November. Looks like I'm going to guess by the end of the year we'll have 33,000 T-shares out in 2039. And that represents 2,000 individual wallets who have staked out for that period of time. And so big deal. Yeah. And we're going to move on to 2040 in just about a month and a half. So we'll see how we close out. And of course, you guys know I believe that's a asymmetrical opportunity if you plan to be around here and you believe in hex.
Yep. And I think there's a gentleman on Twitter, his name escaped me right now, but he's reporting, rightfully so, that the Cuatro Cinco stakes have been rising this month. He was reporting that the amount and the number of new stakers that came in, that was pretty good. So that could be one of the reasons why the price also pushed up higher. So it's good to see that function of adoption,
Well, we've been campaigning pretty hard, right? I mean, I've been campaigning pretty regularly that this is an asymmetrical opportunity. Sure, if you're the short timer guy and you're trying to, or lady who wants to do some swapping and trading on this cycle, right, this isn't for you. But if you're planning to be here long term, you believe like hex at $1 and you want to, in 15 years, and you want to have the most hex and win the game that way, then you have that opportunity. So it's out there. So I think we have that. But even though we're talking about the people doing the staking out there, and we're going to hit the 30,000 or so, it's still only a couple percent of what's the staking activity. So this opportunity is there. I don't know how long it'll last, but we shall see. I'm going to keep reporting on it.
Sounds good.
Hey, if you want to check out my stuff, go to hexfire.io, hexfire.io. Kareem, where can people find you?
Yeah, great site, by the way. I love it. Me on Twitter, Your Magic, very easy, or on IG, Instagram, if you use that. Korean Crypto, Cuatro Cinco. You can follow me there or DM me there. And I want to say shout out to everybody again. Thanks for being here. Shout out to everybody in the chat. If you have any last minute question before we go, let us know. If not, good to see you as always. Another great week.
Yeah. Well, people been digging you, man. Been missing you for a while.
Yeah. You got the energy, buddy.
You bring that energy for sure.
Dropping that value, dude.
Hey, so fast.
He's ready to sell, right? I gotta crack a joke at least. So, I love my people. So I show them stuff. That's what's good.
All right, Fast Abdul. We already said we can find it in YouTube at Pulse Jitsu. Anything else you want to say before we close?
Yeah, and also you can find me on Twitter. The best place is to just follow our website. So it's 2phux.io. There's links to the Telegram there, to Twitter there. Check out what we got going on.
The 2phux.
Yeah.
When Sandy Beach is in the room, that's what we call it.
And like Maddie would say, even though he's not here, stake wisely, our friends. Oh, be careful tomorrow. Big data, CPI. Don't get triggered. Wait for the data to come in. And once it come in, you know what to do. If it's good, you know what to do. If it's bad, you know what to do. At least we talk about it. So.
All right, guys. So everybody stay crispy, and we will see you. We'll see you the next time. And we're gonna be out. I gotta find the right. I gotta find Maddie's right background. I don't know which one he has there. But thanks again, everybody.
Peace and love.
The secret to gaining the highest ROI in HEX lies in a little-known mechanism called shares. When you stake your HEX, you receive shares. It's kind of like a guarantee. Your shares guarantee you back your principal, plus a percentage of interest and bonuses over time. The key to achieving the highest ROI in HEX is acquiring as many shares as you possibly can by staking early and staking long. The earlier you stake and the longer you stake, the higher your ROI will be. The brilliance of the share design is this. Every time a stake is ended anywhere in the world, those shares are effectively burned. They cease to exist. This means that every single day there are less and less shares to be had. This also means that every moment you wait to get in stake HEX, the share pool is dwindling. Now, why does that matter? HEX is programmed to pay out the highest interest and rewards to those who own the most shares. That's why it matters. Staking early is key, but it's not everything. How do you get the most shares? You stake longer than everyone else. The maximum length you can stake is 5,555 days, or 15.2 years. If you want to get into HEX early and become a whale, how do you do it? You stake today, right now, this very moment, and you stake for 5,555 days. As everyone else's stakes expire, you end up holding the largest bag of shares in the network. This guarantees you receive the largest percentage of interest and bonuses. Don't want to wait 15 years to realize your profit? The beauty of HEX is that it's designed to pay out perpetual passive income to its holders, just like a traditional banking CD. This is done by creating what we call a stake ladder. Imagine if you had 1 million HEX and you broke it up into 65,000 HEX stakes from year 1 to 15, setting a stake every year for 15 years. This is called a stake ladder, and there are many ways to design them to work best for you. Some hexers create a staking ladder that pays them every 2 years, some every quarter, and some every month. The idea is that on a semi-regular basis, you'll have fully mature stakes that you can cash out for the next 15 years, or even indefinitely. The smartest hexers have plans to only cash out the interest each period and restake their principal out for 15 more years. This allows them to earn passive income indefinitely from HEX. HEX is a vastly superior product to that of traditional banking time deposit accounts, and it's the purest form of decentralized finance. There is no company, no middlemen, and no gatekeepers in HEX. It's a triple audited autonomous product built on the blockchain that has 100% uptime. Welcome to the future.